Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody. Good morning. Welcome back to another live stream. I hope you're doing well. Good morning or good afternoon. Somebody got mad at me yesterday, said, you said good morning and it's afternoon where I am and I'm upset. So I'm sorry to that one person. Anyways, market's moving here. It's a huge week. We had some earnings this morning. Spotify came out and missed both top and bottom line. Now, even if you're not a stock trader, paying attention to stock earnings reports is really important to market sentiment, especially when you get into some of the big names that are reporting this week, like Meta, which is coming tomorrow after the bell. So, you know, you have these really big companies, Amazon coming up too. That's going to be on Thursday. Then you have Google already reported. That was a good hit for the market, right? A good positive hit. So you have to look at these things because if you're an index trader, you have to remember, if you're trading NAS, if you're trading S&P, if you're trading, you know, Dow Jones, these things, what are they? They reflect a basket of stocks, right? So the biggest in that basket they matter significantly to the overall story. So I'm watching really close. You know, you've got Apple coming out as well. That's going to be what, Thursday? Yep, Thursday we've got a loaded one. Wednesday we've got a loaded one. Meta is a core positioning for me. So these are stocks that I will be watching really close to see how they perform. Tesla's another one that I own. Their earnings missed completely, but they had some optimistic kind of news about potentially Elon Musk coming back, robo-taxis rolling forward. So, you know, something to monitor. But yeah, we have big earnings stuff coming up this week. And not to mention, we also have the NFP report. So really big stuff coming down the pipeline. I've been starting my live streams a little bit sooner. If you're a regular stream viewer, you might notice that we've been starting a few minutes earlier. That is because I've been loving this new question and answer segment that we've been doing on the streams. So I like to say this at the beginning of the stream. If you have a question that you would like answered at the end of today's stream when we do questions and answers, thank you, Chandler, who's on the button with it today, ask us a question here. Click there to ask your question. That will be deposited into our little database here. And then it's going to be a first come, first serve. Whoever has questions lined up here for us, we will spend some time towards the end of the stream and I'll try and answer some of your questions. Taking a look at some technical setups here. NASDAQ's pulling back. I'm watching this one real close on the 4-hour chart. Possibly looking to take a stab today. If we do get the pullback into here, I may be looking to take my first attempt on a NAS long between these two zones of support. 18,800. This is NAS 100, of course, the CFD. Somewhere in this region, I may be looking for a long position on the NASDAQ. that would give us about a 38.2% retracement from here if we were to get that kind of move. So I'm going to watch it, right? I think that the NASDAQ is looking like it wants to try and move higher. I think that there's a good chance. I've been saying it, in fact, actually the idea that I shared at this time that the bottom might be in, obviously it looked a lot better once we saw the big up day, right? But I think there's still a good chance. I've been saying it. I think that there's still a good chance. We never actually, after I said I think the bottom is in over around here, right? We did come down and we came close, but we never put in a fresh low. So even though it was ugly, we may be in the process still of bottoming out. And that's the thing people don't really realize about, when you're looking at a sell-off in markets, it's very hard to tell that you've hit the bottom because this is what they look like. They're not pretty usually, right? When you've tagged a bottom in the S&P 500 and the NASDAQ, et cetera, it's typically, it's not a pretty process, right? It's kind of a tumultuous one. It's a violent one. You hit the bottom and then we rapidly retested it and then we shot up 10% in a day and then we lost the half of those gains, put in a higher low, higher high, right? This is not a pretty, it's not like this, right? Where we just start to do this and we just kind of steady out. What has actually been the case is you had this big movement and then you're having this. That's what a bottom typically looks like. When you go back in time and you look at stock market sell-offs, that's the environment that you get at the bottom is you get this violent churn, this back and forth kangaroo style looking chart. And then once the VIX chills out, then you start to get back into bull territory. Is that where we're headed? I think it's possible. You can't know for certain because this world that we're living in right now is so back and forth. One day we're hot, one day we're cold, one day China, looks like they're going to want to make a deal. And then the next, it doesn't look like there's any deals, right? So that's where there is just this, and I'm talking, of course, about the trade war with China, the negotiation stuff that seems to be full swing right now, or focused by markets right now. So we'll see where all this takes us. But again, from a price action standpoint, although a brief one, it looks like we may have put in some sort of higher high here, right? When compared to this big up day, right? We talked about this a lot on the channel. This big 10% gain day, it fizzled out, right? We had that amazing one-day move. The markets then rolled over, but now have put in a higher low. This looks strong. So we may see the retracement in this kind of move here, but dropping down to the 4-hour chart, like I just said, I like this for a possible pullback play in the NASDAQ. So again, I think that the bottoming out process is a rough ride. It's an ugly ride, right? It doesn't look pretty when it's happening. But we are seeing some evidence here that we may be putting in some bullish structure. So I like it a lot. 38.2%, 18,800 if we get that pullback. Going to keep an eye on it. Hope everyone's doing well today. Hope you're trading safe in all this craziness. I mentioned it a second ago, but if you do have questions, please feel free to drop them in the chat here for us. I'm sorry, in the form here for us. I've just dropped it there. It's also available, if it's easier for you, in the description of this live stream. If you have a question, we will be answering questions towards the end of the stream segment that I'm on. So drop your questions if you have not already. So again, indices are back and forth. They're very volatile. It's almost like you're seeing 1% down moves in the morning, and that's nothing, right? This market is used to 1%. It really doesn't get anybody's attention at this moment until you're starting to see 2+% moves on the day. So yesterday we actually had the first time in a while kind of a chill day. The last 2 trading days have been relatively relaxed. Take a look at the VIX in all of this, right? The VIX has come down a ways from that, 60 level that we saw very briefly towards the bottom of this market. Really interesting to see. So again, VIX has come down. Volatility has relaxed a little bit. And so we also see dollar index kind of stabilizing at least. I think this is pretty important to the story, right? If you're watching the dollar index, what's really key here is you don't really, like if you're talking like stock market related stuff, like indices, etc., stability wise, you really just want to see the dollar chill out and not go too far in one direction. If the dollar index is like ripping higher here, I guess that's arguably it's kind of strange, right? If the dollar's like plummeting, like if you get that move on the dollar, that is signaling that a recession is coming, right? Big time. Like if you get a plummet in the dollar, that's saying, oh, US recession is on the table. Whereas if you get this move, that's telling you markets may be worried about inflation. But in some ways, you could argue that stability in the dollar to the upside would also be okay for the macro, the big situation. I don't know. It's kind of tricky. I think what you really want if you're a stock market bull is something like this. You just want dollar to chill out, not go too far. You don't want it to plummet. Like people are saying, well, that would give you rate cuts. Well, yes, but you'd probably be entering into a recession. You don't want rate cuts. This is where people get it wrong. You don't want rate cuts because the economy is crashing. You want rate cuts because cooling inflation and the Fed can cut, right? There is two types of rate cuts. There's rate cuts where the Fed can cut and the ugly one where the Fed has to cut, right? And this is where you say, if the Fed has to cut, dollar index just plummets, right? If the if the Fed can cut, but doesn't have any, significant urgency to cut interest rates, then what happens to the dollars relative to other currencies? This is why Forex is hard, right? Forex is hard because you have to consider not just the US, but you have to consider other countries as well if you're going to be a fundamentalist on Forex, right? So if you're looking at the euro, well, do they need to cut? Yeah, their economy is worse than ours, right? Growth-wise. Now, that could change over time with all the tariff drama. Who knows? But right now, the ECB has been cutting rates aggressively. So they're already cutting interest rates. They kind of have to, right? So if the Fed can cut rates but doesn't need to rush to do so, that's different than the ECB who has to, right? So understand what this means. A central bank can cut interest rates, or a central bank has to cut interest rates, depending on what the data is telling you, right? Somebody asked, Nick, can't we just track interest rates? Doesn't that tell us a full story? No. Interest rates are the byproduct of the underlying economic data. If you're going to be a fundamentalist, you got to understand, why would the Fed have to cut interest rates? Or why could they cut interest rates if they, would like to? It's a very big difference. Very big difference. What broker does everyone use that accepts U.S. clients? Great question. We have several U.S. brokerages listed in the description. It depends what you'd like to trade. If you are looking to trade Forex in the United States, like euro dollar, pound dollar, etc., consider checking out Oanda. We have a link for them that maybe we can drop here in the chat for you. And if you're looking to trade futures or stocks, you could check out Webull. If you're outside of the US, your options, I think, are a lot broader for brokers that you can choose. Best way to find out for your specific country is head over to a1trading.com/brokers. We have special perks and offers for everybody who's watching this by country. So if you're like, I'm in, Norway or whatever, you can find European brokers that might be suitable towards you, and special sign-up perks on our website, a1trading.com/brokers. So Oanda for swing trading isn't the best, though, because when you hold trades, you pay commission. Yeah, that's every brokerage for Forex. That's called swap. What Oanda does is they just charge it as financing costs, but it's the same thing as a swap fee. So if you're going to trade Forex and hold it overnight, especially if you're holding a negative carry currency pair, like let's say you're short dollar yen, it's going to cost you every day. That's part of Forex. That's not Oanda specific. Every, every broker charges some sort of holding cost for overnight stuff. So that's a Forex 101 kind of can't get away from it, right? Now, there are times you can actually get on the positive side of swap and get paid to hold certain currency pairs long or short, like dollar yen longs will pay you overnight due to the interest rate differential between the two currencies. That being said, personally, I don't love the idea of being long dollar yen at this time, unless you saw some significant, significant development in trade, something that was very favorable to the dollar, safe havens, et cetera, look okay. RateX markets, I have no idea. Best way to check is look up their regulation. If you're a US trader, you absolutely, in my opinion, should not touch anything that's not US regulated, which significantly reduces what you can trade on. That's the reality. But there's no point, in my opinion, in trading on sketchy brokerages because they can shut down at any moment and you lose 100% of your money. There's no, why would we mess around with that? There's no point in messing. That's just straight up silly. Is your Discord free? We do have a Discord version that is free. The signals, that is not free. If you're looking to trade alongside us, join the coaching calls, get access to our educational stuff, that is a subscription service that you can sign up for, or you can pay one time to join. If you want some information about our memberships, there you go. Send us a direct message. It just got dropped in the chat here if you'd like to speak directly to our support team about what our membership options entail and what they come up with. Okay, so let's take a look at gold here. Gold is back to break even here for me. I've been in this trade back and forth the last few days. Really no significant move in either direction. If gold breaks this level here, I'm just going to take a loss on it and move on. And if we can actually start to break through resistance points, if we start to see something like this here today, in the next few days, higher lows, higher highs, yeah, that would be interesting. I think that would probably be where I start to trail stops on my trade, would be if we have a significant break through these levels here, right? We're in consolidation right now. If we get the breakaway move, something like that, I would take this stop loss and I would move it somewhere into profit. Just depends how price action falls. Any updates I make to the gold trade will be shared in the Discord. So if we take a look at like silver, for example, too, silver's holding up pretty well. I've been talking about for silver a break through these highs. If we can get a move through 34.50, that'd be a really good start. Something like this, right? Breakaway move would be awesome. But we'll see. I mentioned it earlier. We're going to do some question and answers towards the end of the stream. We have 400 people watching at this point. If you would like to ask a question, we'll drop the link in that. It's also in the description. And if you're watching on Twitter, which I know some people watch the streams from Twitter, if you're watching from Twitter right now and you would like to ask a question, we came up with a way for, I know you can't really get to the chat as easily because you're on a different platform. What you could do is head over to a1trading.com, go to the a1trading.com, click on live stream schedule here, and then just click ask a question for the stream, and you can fill out your question there. So it'll just ask you a few things to put into your question, and then we'll talk about those questions towards the end. Ballout says he's been asked, yeah, be patient with us, Ballout. We are going as fast as we can on that. We had literally like 1,000 requests overnight for people who want access to our new trade tracker portal for members. We are going to be sorting through those as fast as we possibly can, but it is a manual process for us to get everybody added. So there are 4 of us that are adding people, but still it's just taken us a lot. So Ballout, if you don't hear anything, thank you for your patience on that. And for anybody else who's a member waiting to get access to the new trade tracker portal, we are going to get that to you as fast as we possibly can. But please be patient with us. And if you don't hear from us in a day or so, send us a DM on the website again. Head over to a1trading.com, just chat in again with us, and we'll get that sorted for you. But again, sorry for it's a bit of a madhouse to get everybody added, but it's unfortunately the easiest way for us to make sure that we verify that you have a membership with us, and then we can get you access. Let's take a look at some more stuff here. Euro dollar. You guys know I've been looking for a couple setups here. Let's just take out some things here. Let's take out our minor currency pairs. Let's take out Let's just leave everything else. And then we're going to change our bias to bullish and bearish stuff only. So this is pretty much my current watch list right here. I'm looking for NASDAQ longs. I'm looking for, I don't really trade the FTSE, but I'm curious about this setup. I want to go look at the technicals on it, see if it's really setting up. I might have to take a stab at that. The Dow Jones, the Kiwi dollar, the British pound against the US dollar, the euro dollar, Chinese stocks, although this one's a little stretched to the upside. I don't have a setup there. The Australian dollar, Bitcoin is really interesting to me right now. German DAX, and then on the short side, looking at things like dollar Swiss franc and dollar CAD. So this is a good bit of stuff that we have to churn through. So what we'll do is, I think I'm just going to go rapid fire. I'm going to walk through all of my charts here and just take a look at it. So rapid fire version, NASDAQ, looking for pullbacks, right? So if you give me some sort of, I'm dropping down to the 4-hour chart for this one, 38.2% retracement looks kind of interesting. So I'll keep an eye on that one. Again, sometimes you're going to get setups on the edge finder, but that still means, for me, that doesn't mean I'm going out and buying NASDAQ right here, right now, right? I'm still waiting for a technical setup. So I like that 38.2% retracement. The UK 100. So let's just pull up UK 100. Why not? See what we can do here. Yeah, so this one is pretty stretched. Take a look at the daily chart really quick. If you got either a break through the highs or a good pullback to support, maybe I'd look at it a little closer. Take a look at the Dow Jones here. So Dow Jones hasn't quite made it up to that April 9th high, right? That resistance level that we've been watching across indices here. I'd love to see that one do something like this, break and retest, right? Love that setup. Dow Jones looks really attractive to me. It's a part of the market I wouldn't mind holding on to, right? It's pretty heavy on some value. We got Lee James in the chat saying he's trading a little bit of Dow here this morning. I mean, I like it. So I think that personally, I mean, this is pretty clean, right? You have a pretty clean potential for a breakaway move on the Dow Jones. Like, this is a clean bear chart. So when you see a clear bearish chart, right? If you're looking for bullish setups, so are the bears. Let me break down what I mean by that. If you're bearish, like if you're short on Dow Jones, right? And you're like, okay, this is a reasonable continuation idea. Maybe that works out, right? And for the bulls, for me, that would be no trade, right? Obviously, if we just kind of capitulate here and go lower, there's no trade for me. But from the bulls' perspective, if we're here at resistance and all the sellers are getting in here, and then you get this move, that short squeeze move looks just way too juicy for me not to start looking for positions on the retest, right? Because then what do we have? We have a bunch of people closing out of shorts, covering their shorts, and then, any sort of retracement to me looks really attractive for continuation moves. So I do like the Dow Jones. It's on my list, right? So I'm going to keep going through my list here. Top setups page. What this is doing for new viewers, I don't want to alienate you from the conversation. Top setups page, we're looking at the output scores. So the Edge Finder, all it does is it scans a whole bunch of market data for us. Keep it really simple. It's not a magic black box algorithm. It's not a super machine. It is simply a market screening tool that helps scan a lot of data for us. Many traders use it. Many traders use it in different ways. This is how I use it. It scans sentiment data, like the commitment of traders data. So institutional positioning, it tracks the crowd sentiment or retail positioning. It tracks seasonal trends in markets. It tracks momentum in markets. We're looking at economic data like GDP, PMIs, retail sales, inflation, all that stuff. It's tracking it, giving us a bias. And then I'm looking for technical setups that marry up nicely with the trade. So let's keep going, taking a look at the Kiwi dollar. We've talked about this one quite a bit here recently. If we pull up this one, NZD USD, you can see I've said this a couple times. I'll sound like a broken record. I'm looking for a move back down to like 5,800. Brings you to that 38.2% to 50% retracement. So again, a lot of trades out there for me, just not a lot like at execution level. But I'm very interested in a lot of these trades. So these are scenarios where I probably would take a position, given that the Edge Finder score is still valid. Let's keep going. Pound dollar, taking a look at potential longs here as well. Really a bit stretched here for me. It's probably a 50% retracement from the lows to the highs. Yep, there it is. So if we get some sort of pullback on the bigger picture, I may establish a position long the pound. So watching that one as well. Take a look at Chinese stocks. So if we go up to our Chinese stocks here for a second, don't love this chart. We almost filled this gap here. Just don't love the chart there. Not really decisive trend. Looks like a mountain range. Taking a look at euro dollar here really quick. Pulling up euro dollar. So if we take a look at euro, same story to the pound. I'm interested in this one. An aggressive entry would be like 1.13. I'd like a little bit more if we got like 1.09. So I'm watching for discounts on the euro if we do get them. Australian dollar, let's pull that one up. We're going rapid fire here today. Aussie dollar just didn't quite break this with enough conviction. If we get this kind of move, breakaway, pullback, I'm very interested. But again, confirmation from the Edge Finder. Technicals look okay on that one too. Take a look at Bitcoin with me here. Let's pull that one up. So Bitcoin sitting at resistance, would either be interested in longs around here or a break and retest here. So both scenarios, I like Bitcoin to the long side. Take a look at the DAX. Let's pull that one up. So the DAX kind of looks like UK 100, looks like Chinese stocks as well. These are global equities. Pullbacks probably more interesting than not. I don't love the idea of buying it here. I think it's a little bit stretched to the upside, may have some room to pull back. Taking a look at dollar Swiss franc here. Let's pull that one up. So dollar Swiss franc, interested predominantly in short setups, but this one definitely looks stretched. If we go from this kind of big fall off point here, you're talking about a 50% retracement, at least up to 84.58 in terms of where I would be most interested in possible, short side continuation on this one. So going to watch that one close. US stock market opens up in a minute and a half. We'll see what that brings as well. Other short position idea is dollar CAD. So pulling up USD CAD, this would have to also be a retracement move for me, probably something like this 50% to 38.2% retracement zone. So if you get a pop in the dollar CAD, that would be more attractive to me than trying to sell it down here after we've had the big move. So that is pretty much the recap here for me in terms of top setups for me today, based on the Edge Finder's top setups algorithm. Mentioned this earlier, but if you do have questions for me, feel free to ask them in the form that we will link in the chat as well as in the description. If you have questions, we'll be doing questions at the end on anything trading related. Also, just a heads up, here is something for you. The Edge Finder, which is the tool that I'm using to scan all this market data and basically create my watch list automatically every day. The Edge Finder is 45% off right now. It's our biggest discount that we do all year long. We do not go lower than this. It's the biggest discount. The reason I bring that up is because a lot of people think I'm kidding about that. We are not going lower than 45% this year in terms of our sale events. And it's 40%, but for stream viewers, we're doing 45. So that is the biggest discount available. And then it will be going back to normal price in May. So don't miss out on that. If you've been thinking about it, if you're on the fence about it, feel free to chat with us. We'll answer some questions for you. So send us a direct message using this link here, or head over to a1trading.com and use the live chat feature in the bottom right hand of your screen. Send us a direct message. Let us know that you're interested in the Edge Finder. And if you have questions about how the tool functions, or whether it would be useful to you, or which chart it has, whatever questions you have, feel free to send them to our support team there. And if you want to lock in that 45% off discount, send us a direct message at this time while the stream is live. That 45% off discount will be valid for you. So we have JOLTS job openings happening in 30 minutes. So we have a little bit more time to kill here before that comes out. Just for the stream super regulars, just a reminder, you can always go to our website, click live stream schedule as I'm doing right now. So we have Alan coming on in 15 minutes. Let me just take some time here to see if we have some questions from the audience. I'm going to pull them up. If you've left me a question, I'm going to see if I can answer some of those. Yesterday, I only gave myself 5 minutes, so I'll give myself a little bit more time here today to take a look at it. Okay, so today is April 29th, so we've got a couple questions here. First question is from Marco, who's been trading for 3+ years. Their goal is to find a profitable trading strategy. They do not have any of our tools, but are interested. Like I said, don't miss that sale event. It's ending soon. Nick, Trading Economics has a forecast for S&P 500, which is bearish for Q2, Q3, and Q4. Does that contradict the current sentiment? I wouldn't read too far into those sorts of things, Marco. I mean, wouldn't it be nice if there was a magical, fortune telling forecast for S&P 500? Doesn't mean that it's not valuable information, but I think, I've seen those sorts of forecasts online. I wouldn't read too far into them simply because you don't really fully understand the mechanisms behind why that forecast is the way it is. So I would come up with your own forecast. I would understand the fundamentals. I would focus on what the Fed focuses on. That's what we do here at A1, and really hone in on inflation, jobs data, etc. And I would come up with your own forecast. That's the truth. I don't love the idea. Like, I don't use any of that sort of stuff to try and tell me exactly where the S&P 500 is going to be in Q4 of 2025. Nobody knows, right? There's so much unknown that could happen between now and then. Xavier's been trading for 1 to 3 years. Their goal is to become a funded trader, and they are interested in our stuff. Don't currently have it. Don't miss the sale. What is your win rate and risk to reward? I understand you trail your profits and vary position sizing, but when you set up your trade on TradingView, the long to short position template does not look like a one-to-one risk to reward. Great question. So I just use, when it comes to the risk to reward tool on TradingView, these are not orders for me on the take profit side. On the stop loss, I do have a stop on gold here, but I do not have a take profit here for gold. Like, technically, I could take this and I could just stretch it out and never see the top of it, right? So I don't use a strict risk to reward. So when you ask what's your risk to reward, I don't really have one, right? So I know what I'm risking. I know a amount that I'm risking. Usually it's less than 1% on my portfolio within a singular trade, right? So if I'm out of the trade, I know I'm going to probably lose less than 1% on my portfolio's value. If I'm right, a good trade, some of my best trades, like this gold trade I had over here, that was like I'm just going to give you a very rough, I don't really look at risk to reward that much, to be honest, like what the final risk to reward comes out to, but I'm just going to give you a rough, maybe like a 6 to 7 R trade is what it ended up being, which was a pretty phenomenal move for me. But yeah, I mean, I don't focus too much on that. Honestly, what I do is I just back test my system. I manage my risk. I focus way more on my risk than I do on my reward. And in terms of win rate, again, tricky, because win rate has, especially with my style of trading, which I have, this is pretty much what happens. I have lots of small losses, right? Lots of small wins, and a very little bit of big wins, right? Very infrequently do I get big winners like this, but they pay for pretty much all the small losses and the frustration of the small wins, right? So where'd my questions go? Let me get back to my questions here. Okay. Next question. I'm sorry, I can't say your name. I'm not going to try. 3+ years, learn more about sentiment analysis. That's their primary goal. Interested in our stuff. Well, I was one of the people who got the free Edge Finder event in late March, and I got a +9 bullish reading on NASDAQ, went long and got stopped out. I saw some reviews where people were criticizing the Edge Finder, and what they don't understand is when geopolitical issues come into place, nothing technicals and fundamentals can do. So my question is, can you and your team create space for geopolitical issues? Because I think it would, so this is a question that we get often. Nick, when's the Edge Finder going to start considering geopolitical events? And the answer is, I really don't put a lot of emphasis on geopolitical events myself. Now, here's the difference, right? Headlines and sentiment reports and rumors are all what I would consider soft data. What the Edge Finder focuses on is hard data, okay? And so what I mean by that is that with our system, we focus on weekly jobless claims. If the soft data is really impacting the market, it should start to show up in the hard data, right? Now, you might point to that and say, well, Nick, that's lagging. You're lagging. You're lagging. That we get that accusation sometimes. Your stuff is lagging if you're only looking at the hard data, right? Because you're waiting for the soft data to start impacting positively or negatively the economic reports. But what I would counter to that is if you're chasing headlines, you probably know this well. Many new traders do. If you're chasing headlines or the best stock to buy in May of 2025, if you're on that wavelength, you also know that sometimes there's so much noise in those headlines and soft rumors and tweets. Like you can see Trump say something and then go buy the market, and then by the afternoon, it's down 3%, right? So I actually lean way heavier on let's just focus on the hard data, even if there's a little bit of lag. I'd rather wait for the confirmation for stuff to show up in the hard data, and I don't put a whole bunch of emphasis on, oh, Putin said this, or, Powell just said this, right? What I do is I wait for stuff to materialize in the data. You know who else does that? You know who else is quote unquote data dependent? The Fed. Jerome Powell himself always mentions that the Fed is attempting to be, data dependent. That means they wait for data to materialize. And that's why we do that too, right? So that's the focus. I don't put a huge emphasis. Will we make scanners that help you track headlines for people who are interested? Absolutely. We are doing that. We've got one in the works now. But in terms of like how that impacts scoring, I don't do that because I think it's really dangerous. Chasing headlines, chasing, scary news articles and stuff like that, really dangerous in my opinion. Jason says, I've been trading for 1 to 3 years. Their goal is to find a profitable trading strategy. They already own some of our stuff. Awesome. Shout out. Hope you're enjoying it. I've been trading for about 1.5 years. I'm understanding to read the charts and using support and resistance and trend lines quite well. I'm really struggling to have a set system and do the same thing / processes all the time. Where can I find a simple system for beginners? So the answer is there's no beginners out there that are making money long-term. Beginners don't make money long-term. People who are pros at the stuff do. Everyone else loses money. That's a misconception. And I'm not saying this I'm trying to properly scare you in a polite way because you need to be a little scared of trading in order to make it. People who are, gung-ho about trading, they lose a lot of money. So only pros make money in trading. There is no beginner strategy. There is no beginner system. There is no beginner currency pair. There's no beginner way to trade gold. The only people who make money in the markets are the pros. If you want to become the pro, right? How do you do that? Back testing, forward testing, stress testing. Take what I just said and search those up on YouTube. I've done videos on all those topics. Search up TraderNick stress testing, TraderNick back testing. The only way you're going to find a system is through testing out systems, really getting good. Like if you really want to get good at trading, I'm telling you right now, learn to back test. It's the single answer to how to build a system and actually have some confidence in what you're doing. Because if you're just like, I'm just jumping from video to video on YouTube and trading that strategy for a week at a time, no wonder you're struggling, right? You're not sticking to anything. Like I have a system that is not perfect. Like my concept of using the edge finder plus technicals and trailing stops, sometimes it absolutely stinks and I have drawdowns and it's painful. But guess what else does? Every other strategy. What many traders fail to realize is that whatever you pick, it has pros, it has cons, it has drawdowns, it has winning streaks. What you need to do is take time to back test, build out a system, forward test, demo test, do whatever you need to do. Study, right? Treat it like a 4-year degree. Get good at this stuff by practicing, not by throwing your money in a funding account and trying to get rich quick. That's how you lose a lot of money. That's how most people try and do this. They try and buy funding challenge after funding challenge after funding challenge, and they never invest in education. They never take time to back test. They never, truly approach trading as a student rather than trying to I want to make some money today, right? So again, I'm not accusing you of being that way, but this is a common misconception, and you are not wrong for thinking this way. What's a system I can start using as a beginner? Trust me, I searched that up like 74 different times when I was trying to figure this stuff out. What I realized years later, the only people who make money are the pros. If you want to be a pro, boom, you got to put down the commitment there. Rajesh, hopefully I said your name correctly. I apologize if I didn't. 1 to 3 years is how long they've been trading. Their goal is to become a funded trader. Although I've started using fundamental data in my trading plan a few weeks ago. I have only traded through technical analysis. My question is, how do you backtest fundamental analysis data, or do you or your team use fundamental analysis when backtesting? I found you on YouTube a few days ago. I love your live streams. Thanks. All the best. Thank you very much for the question. Great question. Get that question pretty often. So here's the thing. Backtesting fundamental analysis is really difficult in the way that if you try and backtest the same way that you backtest technicals, there's a difference. So here's what I would encourage you to do. If you're someone in the audience, you're like, how do I get to know fundamentals? Backtest in a different way. So instead of like trying to take theoretical trades and use price action and then map it out over your fundamentals, that's not what I do for backtesting fundamentals. For backtesting fundamentals, I study historical scenarios, right? So give me an example where inflation rose like in 2022 and what happened to gold, or post-election events. What happened to gold? For those who are watching the show back in November when we had all the election drama, right? We talked about that November 5th, how gold would likely have some sort of sell-off because we've backtested by studying historical situations. I mean, literally the last time Biden got elected, the last time Trump got elected, in those events following the election announcement, gold dropped. We didn't know for certain that gold was going to drop, but we studied historical examples. That's how you backtest fundamentals, is you study history. You study the key driving things. When does the Fed cut rates? What does the Fed cutting rates do to the dollar? What does it do to stocks? What are the contexts? Study history. There's no certainty for anything in markets going forward, but history, as they say, rarely repeats, but it frequently rhymes. So study history. That's the best way to understand fundamental analysis, is to understand economics and understand how new data could impact the story. We've got more questions here. I reloaded the screen here. Xavier, I think, already had a question, but we'll just do it really quick. What's stopping you from building 15 plus prop accounts that suit your trading style and make $1 bajillion a month instead of just 10K? You're clearly already profitable, but just wondering what the catch is that stops you from doing this. So great question. I think prop firms are a short-term solution if you don't have a lot of capital, but they're a very poor solution long-term, in my opinion. I'm not saying that I think they're worthless, but the stress of trading on props, I'm sure there are people out there who like to do that, but for me, it doesn't really fit my style as a swing trader. Most prop firm situations are more oriented a little bit more towards day traders. And some months I have 10K months, other months I have 100K months, other months I lose 50K, right? So my average is more than 10K across all my accounts. And I'm more than happy with the returns that I make in the markets, and the swings that I have in my personal net worth each month are already, pushing a little bit what I'm comfortable with doing. So I have no reason personally to go bigger. But if you're somebody who doesn't have a lot of capital, funding programs can be a great way to get started. They weren't really a big thing when I was starting out trading. Now they're huge. Now they're everywhere. But they weren't huge when I first got into trading. So something to think about is they're a great way. They're a stepping stone, but in my opinion, they're not a long-term thing. I think the prop firms should be used as tools to scale up your capital and then move to a personal account. That's my opinion. Other people have different opinions. They're a great stepping stone. They're not the final resting point, in my personal opinion. Real quick, we've got Alan Perez coming up next. I'm going to just rapid fire these last two questions, and then we're going to move on. Eugene says, "Hey Nick, I've been trading for 3 years. For me, most of these currency charts, they are overextended and not giving us much pullback. So I'm not trading any of these. I want to see a good trending market before I trade anything. But the facts that I'm not trading as much as I want is eating me up." Eugene, you and me both, man. I wish I had more currency trades setting up for me. I'm frustrated. I want to take trades too. Nothing wrong with admitting that, right? Euro dollar, pound dollar, Kiwi dollar, Aussie dollar. They've been teasing me every day. Show up to the office, and they're they haven't pulled back. All we can do, sit and wait. Now I trade a large list of things, so I'm looking for a NASDAQ trade. I'm trading gold. I'm trading stocks. I've sold some options against my Tesla position. I got other things I'm worried about. I'm watching the currencies, but I'm not going to stick around and wait for them, right? So I trade a large list of things. It keeps me busy in an appropriate way, where I'm only busy trading things that have good setups for me. Hope that helps answer your question. Best thing you could do: sit on your hands, go take a walk, do something else. I can't say your name. I apologize. Sup, Nick? I don't have the Edge Finder yet, but I will soon. Can you add dark pool data on your Edge Finder? See trades that are not exposed to public, or is the COT data like that? That's a great question. We don't have any dark pool stuff at this time, but maybe that's an idea that we'll add to the bucket list to explore internally on our team. Great recommendation. Okay, guys. Up next, we've got Alan Perez taking over the show. Just a quick heads up before we do that. Remember that the Edge Finder sale is ending soon. You can currently get 45% off during this live stream. If you do not already have a copy, now is your chance to get it at the lowest cost of the year. I repeat, if you are somebody who wants the Edge Finder, you do not have it yet, last call. It ends in May. So if you don't have a copy of the Edge Finder, that's the lowest discount price that we'll do all year long. So limited time on it. It's closing soon. Don't miss it. Send us a direct message here if you'd like some more information about how you can get that 45% off. Up next, we got Alan Perez. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8Cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8Cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Good morning, everyone, or good afternoon, wherever you guys are. Hope you guys are having a lovely day. Let's go ahead and look at some charts. But quick disclaimer, guys, if you guys hear a lot of wind going on, I am like on the corner of this building and there's a bunch of wind hitting my windows. So it seems like I'm on a sailboat, but I'm all right. But let's go ahead and look at the US dollar here, where it's at. Really interesting level here on the daily and the weekly. This is what I'm looking at here. This was support, or this was resistance, now turning it to support. I'm really interested to see what happens in this zone. I think, honestly, we can go either way. If we get a pullback, great. That's what I'm positioned for at the moment. But there's a really good chance that we could go ahead and see some more dropping immediately. So that's kind of on the dollar, right? Another interesting thing that I want to look at is the equities in the stock market. Same thing, right? Possible scenarios on the NASDAQ. I know NASDAQ's one of the more favorite things to look at, right? I had this trend line here to the downside. This area in general, right, this 19,200 to the 18,800 level here, in my opinion, was an area where bears really had to step in. And so on the short-term time frames, right, that could still be a possible scenario if they go ahead and kind of just push back downwards. Wow, that's some really good English. Thank you. I appreciate that. I hope you're not being sarcastic there, Ramon, but I appreciate it. I am Hispanic, so there are some times where I do kind of trip up my words or whatever, but this is what I was looking for. So if we get some bulls coming in, right, I want to see this level hold for the NASDAQ. Same thing with S&P 500. Looks pretty similar as well. Downward trend line. We're just shy above it. We broke past it. You could, say that we retested it, but I want to see these levels really, really hold. Now, what could make this thing go higher or what can make it go lower is really dependent, in my opinion, on tariff trade deals. I know that we have a lot of trade deals on the horizon that the market is, looking forward to and is very optimistic about. But if those things do fall through, then we could see another slide down. And like Chris Pulver said, we pretty much priced in the worst case scenario. It is very well possible that we can just stay in this range until something, kind of comes into fruition. Is my channel monetized on YouTube? It's not. So I just started it. My YouTube channel I created it for people that I was, working closely with and my family, and also just a daily journal or somewhere where I can, visually put what I do and stuff and look back on it. And then, you know, as I was a member of the community, Nick really helped me and promote my channel. So, you know, fast forward, we're here now. So no, my channel is not monetized on YouTube, but that's probably, you know, one of my goals is to get it there and get it to where I can share value and provide value to a lot of people. Because I really think that the trading industry is really saturated with a lot of ingenuine people. And it's really difficult. Like the reality is it's really difficult, right? And there's a lot of things that I go through that I want to share with you guys. So yeah, that's basically the glimpse on my channel. But back to what I was saying, what could really send us down is if trade deals fall through. Now, I remember it was yesterday on Financial Juice, China went ahead and said that the rumor about the U.S. cooperating or U.S. and China talking about tariff trade deals was actually false. Now, usually when you would see a headline like that, stock market would fall. Now, it did a little bit. Dollar also fell a little bit, but for the most part, it really didn't have that much weight as it usually would, in my opinion. I remember when there would be certain headlines come in and market would really, really react to those things. And I didn't see that. It was pretty stable, in my opinion. Now we have the VIX down in the mid-20s at the 25 handle, which is a good thing, in my opinion. So as long as we stay in this territory, I think we are, you know, set up for, as long as we get more optimism, more growth. I know we have JOLTS coming in at 9 o'clock. That, in my opinion, could really help this market chug afloat. Now, another thing that I wanted to kind of just piggyback on, right? Let's think about this. U.S. stock market, U.S. equities, U.S. tech in particular is a global leader, right? And what I saw that was interesting on the COT reports, COT position, let's go to COT data history. Let's look at the stock market, SP500 in particular. Okay, so something just hit the Financial Juice. China waives tariffs on U.S. ethane imports. They waived a 125% tariff on U.S. Ethane imports imposed earlier this month, blah, 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 blah. So that could also be good news. That's going to be added. 704 woman, I see your comment. Let me go ahead and finish this point here. Hey, Bashi, how you doing? So one thing I saw that was really interesting on the stock market, right? And I'm going to say this and I'm going to transition into something else. But one thing that I saw, I wonder if I can see specifically. Okay. April 18th, 2025 stock market. We see that a lot of long contracts were moved. 66,000 long contracts were taken away from the stock market March 28th and March 21st. We saw those really big outflows as well, minus 42,000, minus 79,000. So what I think could happen in the near term and what I'm positioned for, I have a couple long dollar positions. I understand I'm going against the long-term trend here, but a lot of money left the U.S. stock market and U.S. equities. And the U.S. equities is a leader in the globe, right? So in the short term, foreign investors would have, if they want to reinvest into U.S. equities, they're going to have to transition those foreign currencies into U.S. dollars. So that's what I'm betting for in the short term. Also, the fact that, you know, uncertainty and demand for safe havens is also going to taper off. That's why at the moment I'm long dollar yen, dollar Swiss, I'm long dollar CAD off the backs that oil is going to continue dropping. You see right here, oil hit this resistance level, kind of falling off here. So in the short term, I think if we see more inflows in the dollar with the ultimate goal to reinvest into U.S. equities, I could see those two assets, U.S. dollar and the stock market, going to continue upwards in the short term, right? Now, I understand that the U.S. is pretty much lagging when it comes to its easing cycle. If you look at the 10-year yield, it's dropping now, but as far as everyone else is cutting rates, and we've been pretty much holding for as long as we possibly can, with the intention of having a soft landing. So I understand that, and so I am expecting in the medium to long term for the U.S. dollar to go ahead and depreciate, and so I am actively looking for areas in the market where I can sell the U.S. dollar. I even saw Europe. I think yesterday they said on Financial Juice that they're not, or they're considering even going into the neutral rates, which is crazy, right? So that's also something you have to look at as well. So that was just my take on that. So more optimism, more inflows could allow for the dollar to appreciate along with US equities, as long as we keep maintaining tariff deals and there's no more uncertainty being thrown at. And so that's why I think that could happen. If you even look at the euro, I saw this chart on LinkedIn today, Euro Stock 50 index, the Eurex. Look at this, guys. This is just kind of to emphasize that the U.S. is, the leader in equities. Now, I know Chinese equities is one thing on the horizon that I remember when I was at J.P. Morgan. That was being advertised a lot. That Chinese equities, guys, in the future, think long term. I understand that, but look at the Euro Stock Index, the 50 index, right on the futures right here. If you invested in 2000, you're just getting break even, right? So, and then if you look at the NASDAQ, let's go to 2000. If it even goes that, it doesn't even go that far. Look how far you up, right? So I just kind of emphasize how US is a leader in these things. Did you go long on NASDAQ? Ezzy, I did not. So most of my money is allocated with Wanda, and so I don't have the ability to buy or to trade, like intraday trade or swing trade the NASDAQ. That's more of a longer term in like a Roth IRA kind of thing. All right, let me look at those questions for you guys, and let me be mindful of the time here. I know JOLTS comes out in about 3 minutes. Let me address 704 Woman's comment first. Speaking on tariffs, Amazon will be highlighting the tariff in their listing price just so people will know how much this tax is impacting their bottom line. 34 is really mad at Amazon. El señor Alan Bonito habla. Muchas gracias. Mi papá es de El Salvador y mi mamá es de México. Reynosa. I'm watching for a pullback on dollar yen to 140 for a long position. Okay. I don't know about that. I have AUD potentially go as low as 0500. Yeah, like I said, I think short-term dollar appreciation could happen. Now, I understand I'm on the opposite end of the tide, right? Longer term, dollar is going to depreciate, in my opinion. So I have to be very mindful, right? No, I did not go long NASDAQ. What's the overview on dollar yen? So dollar yen, I'm long at the moment. I really got a good position right here at the 148 handle. I'm looking for 145. If we get to 150, even better, or 148 to short. But that's what I'm thinking in the long, in the short term here as a swing trade. But we really held this level up nice, this 140 handle. I really like how this level held. What are some scenarios we're going to have? I'll go over that real quick. I know we have JOLTS here, so I want to, Okay, you guys want to see JOLTS? I'll show you JOLTS. We got 45 seconds here. Let me refresh my page. I probably refreshed at the wrong time because I'm sure this, oh, there you go. 32 seconds, 30 seconds. What am I going to trade in a couple minutes? I'm not going to trade anything. So I already have positions in from last week. So I don't plan on placing any new trades. If anything, I'll be managing trades. It's really tricky to trade at the news because there's a lot of, depending on how the news goes and if it sways sentiment a lot, there could be a lot of repositioning at the higher level, which cause a lot of whipsaws. Consumer confidence came in lower than expected. JOLTS also lower than expected. So we'll see how the market reacts to that. Dollar down a little bit. We'll see. Euro. Let's see how the dollar reacts on a lower time frame basis. We'll just go to the 1 hour. Can I transition to multi-charts? I can. I think I have that set up. I don't, my friend. I'm sorry. I do not have that. I mean, I can kind of just say what's happening multi-chart. Equities are down a tad bit, dollars down a tad bit, but like really nothing's really happening. Like if you look at this dollar chart, in this last hour, it's only fluctuated 0.12%, which is nothing. But yeah, consumer confidence came in minus. Consumer confidence came in lower. JOLTS came in lower. Now, what could happen is this whole China waves. Look, I'll show you guys real quick. This right here, China waves, whatever, could be indication of, you know, more negotiations with China, better relationship with them. So the market could go ahead and, you know, maybe not really take too much weight to this and more focus on the China relationship that we have. That tends to happen a lot, guys. I remember, was it a month or two ago, CPI came in one way and the market should have reacted one way and it really ignored it because it was just other things that were more important that the market thought was more important. You know, that tends to happen. That's why market context is really important. It's not always if X come out, Y is going to happen. Sometimes if you just pay attention to the broader context, that'll give you a better understanding of why something's moving and why something's not moving. So let me go ahead and what's thoughts on US30? It's failed to break out 5 times. I think it will have a flush soon. So Kasim, I don't trade US30. Here's my thoughts if I'm just thinking off the top of my head. Equities right now are trying to, I guess, get revived, right? If we see more inflows in the dollar, that could indicate that we're going to see more inflows into the US equities. Right now, I know like the smaller index like the Russell and 30 really heavily dependent on interest rates. I do foresee that interest rates are going to come down, right, in the medium term to long term. And so if that does happen, if we do see signs of that, then if the Fed says that they have they're more confident in that, then I could see those equities rising long term. But as far as intraday day trading positions, that's not something I really do. So I don't want to guide you in the wrong direction. I feel really bad if I tell you to do something and, by the way, I would never do that. But I don't feel like my opinion would be the best one if you get where I'm going. Really interesting. It confirms recession. Off main, sure, I would say that. But also the news, right? If you look at television, no matter what news outlet you liked, Fox, CNN, or Bloomberg, they sling a lot of fear. Fear sells. So it's kind of expected when you hear all that noise and stuff in the news and, you see these bad reads. It's kind of expected, A lot of people are really, really scared. You're welcome, Kasim. A lot of people are really scared, but maybe in those times, that's when it's time to buy, right? Like a good indicator was the put to call ratio when it was super, super extended. That's where this low was made, right? That was a great time to buy when everyone was saying extreme fear, we're going down, another 20%. There was zero DTE options. People were betting zero DTE options that the market was going to sell off 20% in a day. When you see those things, the market, that sentiment, that's when you hear it all the time. Retail traders, they sell at the bottom and they buy at the top, right? The timing is always off is because, fear gets slanged a lot. That's just my opinion. Wind chilled out a little bit. That's good. Any other questions? Any other charts? I guess I'll go over if you would like to recap for anyone that missed it, my current positioning. I just look at the DXY because most of my positions are correlated. So you can kind of get a sense of where I'm at. Long DXY. I'm trying to long into a position where I can short the market, right? So just looking at it, This could be a level where I can short, or even the 103, 103.5 level. That's what I'm doing in the short term, with the intention to go ahead and short the dollar longer term, because we still need to cut rates. We're behind in that aspect, whereas other countries are already going to, Europe said they're even looking into going into a neutral rate. So that gives me a little bit of confidence into going short the dollar longer term. Yeah, I would love a deeper pullback. It's in my best interest to go ahead and get a deeper pullback. And if we do get that, right, euro dollar to the 112 level, I'll buy that for sure. Pound dollar, if you get back into the 1.32, I'd definitely buy that. Dollar yen, if we get to the 145, I'll take a stab at that one, and I'll probably take another stab at 148 if we keep chugging higher. Dollar Swiss, if you get to the 0.8400 level, I'd sell that all day long, because this will support, now potentially turning resistance. And if you look at the dollar Swiss to the downside, you have a lot of room right here. If you look left, you got, if we hit the 0.8400, you got another 1,300 pips that you can take advantage of. Now, we're going to go that low? I don't know, right? I don't know that. That's going to be a matter of me reacting to what's happening in the present moment. But yeah, that's a possibility. Dollar Canadian, we're at a really interesting level here. This support could really flush down, and we have all this room to the downside as well once the US dollar starts actively going into their easing cycle. Because right now we're pretty much, we've been holding for as long as we can, understandably, right? Because of the dual mandate is to, control inflation and good jobs. And so I think we're in a stage where if we get more optimism, more figures coming in that kind of promotes that stabilization, then we can go ahead and start easing for the US. If you didn't have prob account, I'd swing on an M1. You gotta have a sniper entry though. I'm interested. Everyone in the chat, I want to get a consensus. How are you guys positioned, and how are you guys changing in this environment? Because I know my strategy changed a little bit once we got Trump in office, and we got, as soon as, the Trump trade, right, when we saw these 100 pip moves and then whipsaws back down, my strategy had to change a little bit. I had to use wider stops and lower my risk size, to kind of adapt to this environment. Are you guys doing something similar, or are you guys kind of going business as usual? I'm just interested. I'm also interested to see what you guys trade. Kwangmin, yeah, I'm right with you too. What lot size do I use? It's really dynamic. In Forex world, a smaller lot size will be like 100,000 units or something like that, to kind of, factor in all this volatility. But I use really, like, I don't have a static sizing for positions. It really depends on the setup, what stop I'm going to use, volatility that's to come. It really depends on a lot of things. Just enter natural gas shorts. I can look at Andreas trading Forex. Forex has been really good this year. It's where most of the opportunity is, but in the near term, that could actually fade off, and we could see more equity indices trading better. I got 5 minutes, guys, before I hand the baton to Chris. Yeah, you're going to stick to gold, which is less prone. Yeah, gold's very volatile. If I did trade gold actively, which I don't, I definitely use the approach of like smaller sizing and wider stops, just because it's really volatile. Cool. I'm seeing a lot of new names here, which is really awesome. Ramon, euro dollar. So I took a contrary position. I understand that the wave is to the upside on the euro dollar, but I am short euro dollar. If I go into a lower time frame basis, I want to be on the right side of the V. So when I saw this right here, I took a short. I'm shorting into the 112 level, where then I will re kind of just strategize and say if I'm going to go long at the 112 level long term. That's my position there, especially if by then US has more confidence to go ahead and start easing their rates. That'll be good as far as fundamentally to go ahead and go long euro dollar. But I'm just waiting on deeper retracements. But right now, I'm going counter trend at a very small size because I understand that, with this very strong momentum, small pullbacks can get bought into really quickly. But I'm just doing that to get some, short-term income here. What kind of trader? I trade macro, basically interest rates, I would say. I trade currencies, the major currencies. If there's an obvious in-play trade like the Swiss yen couple weeks ago, I'll do that. But for the most part, I swing trade currencies. Othman, been waiting patiently for a good position, but nothing is pulling back to my area of interest. The fact that you understand that and that you're being patient tells me that you're set up for success, because most people are going to try and find trades when there's really nothing to take. So I commend you for that. Yeah, shorting EUGU2. Yeah, just with small size here. I'm seeing a lot of good new people here. I'm really happy to see that. Current fundamentals on the dollar. I think in the short term, we could see some appreciation in the dollar as we see some inflows to kind of go ahead and reinvest in the U.S. equities if tariff uncertainties come down. If not, we could just see some more flushing. I watch Bloomberg. Yeah. Yeah, HBOT, I agree when it comes to those. I remember trading like beginning of the year. It was funny. I'll have like a dollar CAD long position, and I'd be folding clothes, doing laundry, and the thing will be up 200 pips. And then I'm like, oh, snap, cool. Or 100 pips or whatever. And then 30 minutes later, it's coming back down. I'm only up 50 pips. I'm like, oh my God. So that right there was like an introduction to like, okay, we're going to have another one of those years or another cycle where it's just a lot of volatility. And so, through some experience after that, I had to go ahead and dial down. And that's when I said, okay, I'm going to lower my position sizing and widen my stops. So I have 2 minutes here, guys, before Chris Pulver's on. Someone asked me for Aussie yen, so I want to go ahead and address that one before I head off, guys. I want to make sure I answer most of your questions. Aussie yen, I guess this was a chart I had marked up here. I never took this trade. Oh, I think I addressed this before. Yeah, on one of the other live streams, I said that. Aussie yen, essentially, I'm waiting for this level to get hit, the 93 handle to the 94. I'll take my first stab at it, but I would really like it to retrace even more into the 96 area. And then I go short long term, because the yen wants to increase their interest rates, which, initially when that happened, it caused a lot of deleveraging, a lot of exiting of the carry trades. And if they continue to do that, I think longer term yen is going to appreciate. So for whoever mentioned that, then I hope I answered your question. I'm short term bearish on the yen, just waiting on a pullback. But longer term, the Bank of Japan wants to go ahead and continue raising their rates. Before, they were at negative interest rates, and when they went and hiked on August 5th, it caused a lot of unwinding and carry trades. And so longer term, I believe that if they continue to go on that path, we could see some more strength in the yen. Haven't taken a trade for 2 weeks. You know what I say? I say you haven't lost money in 2 weeks, which is a good thing. I know Chris Pulver's on soon, so I want to be. I know it's 9:15, so I'll just be mindful of that. What do you guys think? Do you think stock market's going to crash? Or you guys think that the bottom was put in? I think it can go either way. I think it's too soon to call. I'm like cautiously I'm optimistic for sure, but I'm just cautiously bullish. If I can get my words right. Bottom is in. Okay. Another reason why I took that contrary position, long dollar right now in the short term, I saw that and I really love this tool, man. This top setups eco is a game changer, bro. This right here. So gold was at the top, now looking like it's -1. Euro dollar, New Zealand dollar was like really high up here. New Zealand dollar still up there, but we're seeing like a short-term kind of flip or stabilization there. So that's why I got the dollar Swiss went ahead and now is at a neutral rating right there. So if you guys don't have the Edge Finder, I would really consider it. It really helps a lot. Even if you don't use all the tools, even if you use maybe 2 or 3 of these things, it'll definitely help you out. When I left the bank, I used to do this crap by hand. It took a lot of time. Also, golds. I think gold's due for a pullback. It's really extended. Now, I'm not going to call that because gold could rally another 2-3% and then drop. But I think it's extended regardless. For once, I agree with Bashi. Look at that, guys. You guys are maturing over here. No, I'm just joking. I know James, Ball Out, and Bashi, you guys have a continued interesting relationship, which is really interesting to see in the chat. Kasim definitely crashed more. So one thing I remember when I was talking with Chris when we were reacting to the Fed meeting when Powell was in Chicago, he brought up a chart which was really interesting. Whenever the Fed starts going to starting slashing rates, there's some deep pullbacks in equities. I remember that. So that's what I'm saying. I'm pretty cautious. What about gold? Yeah, I mean, look at gold, man. It's a good trade, I would say. Like, it's outperforming every asset. I think the new wave is like instead of bonds in your portfolio, like standard 60-40, I would say you replace that 40 that you would put with bonds with gold and crypto or gold and Bitcoin, I would say. Because look at this. When equities are down, this thing's up a lot. So that's a really great hedge. I'd love to see Nick and the team's reactions. I will say when you're here, that like on the back end, the chat can kind of go by fast. So sometimes I feel bad if I miss somebody's comments or anything like that. But I definitely do see you guys go back and forth, and it's pretty funny. So it seems like in the short term, right, we got a missing JOLTS, missing consumer confidence, and the market's up a little bit. But you guys, Chris Pulver's on. I hope you guys have a blessed one. Thank you guys for having me. It's always a pleasure. I'll see you next week. Happy trading. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. I think I've got to close out a trade here on Tesla this morning. This was coming up during closing bell yesterday. Let me have a sneak peek. I had some 111 trades on Tesla. I'm waiting for an SPX trade to close out this morning. I'm up about 14%. I've adjusted my take profit to what would that be if I did 215? It'd be $40. So I adjusted it to about a 15.6% profit. So I'm close to getting that thing hit. Let's go to this account. So close to SPX, got it filled. So let me update this one really quickly. Quick update. Entry for 255 credit. Closed for, so that trade. There we go. So 215 trading for but yep, profit target hit. Okay, so taking the winner, price getting back towards my center prices, which is good. So sold some calls, sold some puts, price cooperating nicely, taking the win. Let's have a look here. At a Tesla trade. Right now, take a look at markets. We are still kind of hanging out around, if I go to the higher time frame. So earnings on Wednesday, Thursday, Mag 7. This is past support. This is a very choppy zone right now. I wouldn't be terribly surprised. I think, getting through this week's price action, I could see prices being very indecisive and maybe waiting for a bit more clarity to get through this week. If Mag 7 earnings are solid, I could see prices, melting up a little bit higher into some of those pullback levels. Here is a 61% zone from the high to low swing. That would be your 21% peak to trough. If we come back to kind of that golden ratio, that gets us to like 5640. We come back into previous highs around 5700, 5750. I think Mag 7 is going to have to be pretty solid on Wednesday, Thursday for that to also push the markets up. I did see some news today that was interesting, like General Motors is not doing buybacks. I think now that the buyback window is open, I'd be shocked to see companies not doing buybacks. But you never know if that's going to be this interesting tone. It's like, we don't know what the future holds. We're not going to do buybacks. We're going to hoard cash, or who knows. Then that could obviously be a little concerning, because that's kind of what keeps the stock market propped up. It's you have general flows, interest rates, monetary policy, fiscal policy, buybacks, and company participation, as well as earnings and forward guidance. Interest rates are a big part of that. That's monetary policy. But this week, Mag 7 earnings on Wednesday, Thursday. Is it enough to push the market into a melt up mode? Is it enough to turn the market's corner where it's like, yep, this is resistance because it was past support. Now it's acting as resistance, right? Like literally, today and tomorrow, or I should say yesterday and today, this little range trade, we might just want to keep a close eye on this. If price breaks, there could be some flows. If price breaks, there could be some flows. There's a gap to fill here. There's a gap to fill here, right? Again, I'm talking like very granular short-term price action. But if we get a break to the upside, yeah, we can go to 5650 or 5700. We get a break to the downside, we can drop to 53, 5300, 5350. So we'll just keep an eye on how price actually behaves this week. It could be very choppy. It could be back and forth, but don't be terribly surprised if we start to see anywhere between like 1% to 5% swings in a week. So the market is still like lots of indecision. This pullback and this kind of offer of de-risking and deleveraging is, I think it's fair. But having this market, offer up that type of push, that type of symmetry, I think that's a great spot to be de-risking if we do go a little bit higher. I would imagine that Mag 7 this week is going to be pretty steady earnings, because this shouldn't be reflecting tariffs. Okay, earnings right now, it's like the forward guidance would be talking about the uncertainty of tariffs, but the actual earnings report, shouldn't be reflecting any major tariff impact. That will be next quarter. So anyway, for the day, things still pretty choppy. We'll take a look at the heat map. I want to look at, I can close out that trade. So we're about 50-50 now. We got 46.4% of stocks advancing, 46% declining. I've got MicroStrategy hitting a new chart alarm. Want to check on Tesla really quickly to see, should be a couple of trades I can close out. It was a 205 by 200 by 195. I pulled in that trade for 284. Yesterday it was showing a debit of 85 cents, so I can take about $200 off the table. Also lower the risk quite a bit. So let me see what that looks like on Tesla. Let's see here. Snap has earnings this week. I saw a big gap in HIMS. HIMS is up to like $35, $36 this morning. Right now it is at 34.81. So we gapped up to like 37. We faded a little bit. I'm up about $2,600 right now in HIMS. So I've got a ratio spread looking pretty good. That's up about $170. I've got a diagonal spread that maxes out around 37 on the call side. So that could get called away for about $4 per share. And I've got quite a few of those. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 of them. So if I've got $400, that's another like $3,600. So we'll see. Tesla trading at 281. I should have a 111 in here that I'm interested in letting go of. So this is out to May 16th. This one's up around $200. So this is the one I was considering closing. What's the debit for right now? This should be trading for hopefully less than 85 cents. I mean, I still think it's wise to take the profit. This is out 17 days. 195. Let me look at the strike here for the May 16th. We're trading at like a, I mean, it's like the odds of this thing getting hit or assigned is pretty darn slim. I think I'm going to hang in there for this week. I'm going to let this go for a little bit longer. I might even roll a call out another week. So these covered calls at 250, 750, I might just roll them one more time. I'm up about, I don't know, 1, 2, 3, 4, probably $2,500 on covered calls right now. This 111 trade sitting up around $200 is $800. If I go a little bit longer, you know, the good thing is it's a low delta. Like, I know Tesla is volatile. This could obviously change pretty quickly. I guess the question is, if I wanted to close this trade down, because this is a much higher strike. If I close this trade, I don't really want to close it for a loss. And I've got a bunch of credit spreads. Naked put, I'm going to hang on to that one a little bit longer as well. So let me just talk out loud here for a second. So 195, if I close this down for $200 profit, if I close out these 245, 111, same expiration, this one still looks okay, but a 245 is obviously a little bit higher delta. That's trading at about a 18 delta. So, one standard deviation move, probability wise, I shouldn't get assigned at a 245. I shouldn't get assigned at a 245. I don't really want to hold this trade all the way to expiration, but the goal is if I can survive this week and price can stay somewhat stable around this like 280, 290 handle, maybe even, I mean, if we get Mag 7 to lift the animal spirits up a little bit, maybe the 290 to 300, all those trades start to look better for profit and get closer to expiration. So I think I'll sit on this trade for maybe this week, and we'll just see if Tesla stays somewhat buoyant and resilient. So Tesla is at 281. You know, like I talked about this yesterday, I'm concerned that we have a bit of a resistance here. And if Tesla drops back down, obviously we have lows around 220, highs around 290, and somewhere in between, it's like prices are going to settle as they settle. But we had a high around 293. I just want to see if we stay somewhat elevated on Tesla. We shall see. But let's go top down currency strength chart in the day. Right here, we're seeing the dollar on top. We're seeing the Swiss making its way back up. The yen was also getting a little bit stronger from weaker position. Big drop in the Aussie New Zealand this morning. So big drop Aussie New Zealand. Looks like we have some risk off trading going into this opening bell. So around 9 a.m., JPY gets stronger. Around 6 a.m., this is all Eastern time. 6 a.m., the Swiss starts to get a little bit stronger. Dollar was already on top. Not a ton of volatility on the vertical axis. But let's have a look at everything top down. So S&P on the morning is slightly negative. Pretty choppy overall. This is yesterday's entire day. So yesterday's entire day was essentially a zero gain. I think the markets actually finished slightly positive on the morning, but today is relatively calm. So that's that. I mean, again, fine. And we're hanging out at this level. I'm going to go ahead and so this is a sell trade from this morning. So I'm going to move this. I'm just going to set it at yesterday's low, and I'll set it here at today's high. It's like, yeah, as we get into like Wednesday, Thursday, short-term price action is if we break higher, we probably have room to drift higher. We break lower, we have room to drift lower. So it's not crazy difficult to see this level is a gap, okay? And this level is a gap. So if we have gap fills, let me use a slightly different color here. Let's go gap fill and gap fill. So if we end up breaking higher, a gap fill around 56.70, we end up breaking lower, gap fill around 52.88. That potential swing percentage-wise, if we break above the high, we're looking at about a 2% move to the upside, and possibly some room to run, but I mean 2% feels pretty solid. And if we break to the downside, I mean I would expect the market to move a little bit faster, and filling that gap would be about 3.25%, 3.24. So potentially a 2% breakout above yesterday's highs, potentially a 3.25% breakout if closing below these recent lows and trying to fill a gap. All right. So there's some chop and some indecision. Let's take a look from the bigger picture. I asked this question yesterday. How many of us think that we're going to retest lows versus retest highs? My personal opinion is that we're probably closer to a gap fill here or retesting some type of higher low. We'd have some major concerns if we retest the lows. So what would be the major concern? Well, this trade talk in this 90-day window, things get worse, things escalate. Maybe China continues to not play ball. It's like there's a lot of leverage going on here. I listened to an insurance podcast that I'm going to have to re-listen to because it was kind of late last night. But basically, it was the guy that wrote the milkshake theory, and just talking about the position of China versus U.S. right now, and a lot of there's a lot of power. It's just a straight up power play, and it's really abrasive. It's really aggressive, and I don't know if it works. I mean, it's like the silver lining and the hope and optimism that it does improve the global positioning for the U.S. But I also think that it's a big power play from number one, number two to just take some bigger stabs at each other, and I think that's where things get a little messy because it's a very disrupt when you have world number power one, world number power two, essentially, head on collision. If nobody budges and flinches, I mean, look, we know Trump flinched with a 90-day pause, but that's essentially like the world is in that negotiation, right? China versus US is still the main focus. And until that is resolved, this is where the market's still going to be uncertain. So I'm not getting super bullish, even if we break this trend line. I'm not getting super bullish. I think this runs right into some key resistance levels. But gap fill here, running into a trend line break. We could have some levels retested around like 53 or 5200. So I just want to keep a close eye on all that stuff. Right, I'm still hedged. If we do retest lows, those hedges pay out very well. If we don't, we drift up higher, then I'm just going to be de-risking, deleveraging, and adding some more cash to the portfolio to be ready for a different positioning. But for right now, I'd say watching to see, do we get a breakout up, breakout down? And I think right now it's like patient on futures, patient on price action, not really getting super directional. So should be okay. All right, Qs, let's go NDX. So we are on the right-hand side of the trend line. With Mag 7 this week, there is room for the Qs and the NASDAQ to get up into this 200 moving average. We still have our death cross. We still have some concerns. If this goes up into symmetry, this would look like a pretty nice bullish pattern. I still think there's a pullback. Even at best, a high or low is going to have to form. So maybe there's a long opportunity in here with a pullback. I don't think the market just goes up and up and up and up and up. I don't think that happens. If it does happen, I honestly will be shorting the market because I think at best, what hasn't been priced in is the fact that our price to earnings on the S&P is still very high. And I think that earnings compression, I mean, I don't know how Fortune 500 companies can have this super optimistic outlook going into this year. Like right now, with the reality of everything you got on the table, you have some of the biggest companies in the world with a tremendous amount of uncertainty. So I don't know how earnings necessarily can be so good. Right, the consumer is, I'd say, stretched pretty darn thin. I mean, this is like the soft data that has yet to become priced into the market. So that's my big downside concern is that if we're going to retest lows, it's the reality check that this market is just not able to sustain these all-time highs. And how does it play out? Well, I mean, if we melt up higher and everyone's like, oh my God, look, no recession, and then everyone starts to get bullish again, that's a perfect time to be contrarian, I think. it's almost easy. If it starts to fall here, if the market starts to fall here, then it makes a lot of sense. You've got your bear market, your bear market impulsive move. You got a bull market rally, and then you'd have the bears taking another swing. Whether it's a higher low or it's a retest of the lows, I think the bears take another swing. Okay. But when everyone would get super excited, all of a sudden you'd see the sentiment reports going, way less bearish, and they start to maybe even show optimism. I just think that's a perfect time to short it. I mean, and it'd be a hedge. It'd be a cheap and expensive hedge, but I think it could pay really well. So we'll see. It's all noise right now, and there's a lot more clarity hopefully when we roll into July. I think by the time the Fed starts cutting in June, let me take a look here at the bond market. This is going to be important to watch. TLT is making yet another high, which means that the US 10-year is also dropping to some fresh lows. So we're down at current levels. We're down another, I'm just going to send a text out. We're down another 0.47%. And basis points wise, not a ton, but another 0.02 basis points. I mean, I'm paying attention, like every 10th I'm paying attention to, because I'm trying to get my mortgage. If I can see a mortgage on the house that I'm closing on end of May, I'm trying to get that as low as possible. And so I'd like to see it just kind of settle back in. So something around here maybe gets me into like a 6.5 lock or something like that, which is okay. It's not great. I mean, I sold the house at 2.72%. By God, I wish I had that interest rate, but it is what it is. All right. Anyway, let's keep going. So NASDAQ, some room to drift higher. Where to? There's a 200 moving average right in here. We still have some gaps in this area to fill, if Mag 7 is able to take us higher. Mag 7 this week, Wednesday, Thursday earnings. I will be pricing out some earning trades this week. Let me have a look at this. So this morning we hit with SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, Spotify. Take a quick peek at those. That was before market. So SoFi is up, but falling back. So we hit top and bottom on SoFi. That's not bad. Okay. PayPal, missed in revenue. BDPS up a little bit today. Not much, by about 1%. Let me zoom out on PayPal. PayPal fundamentally is not awful. I took a ride on PayPal from this recent swing. I was scooping up some PayPal around the $65 handle. 65 to 90 was a pretty good run. I took some profit on that one. This was a couple of this was a debit spread. This was a credit spread. Just did some income trading on that swing. I also did a diagonal spread where I bought a deep in the money, like a $50 call, and I sold like a 80 to 85. I think I paid like $10 for that. Grabbed a nice little rewards risk that was greater. Now we kind of reset, but fundamentally, I think PayPal looks pretty good. Again, it's a question of the consumer though. Along with, I mean, it's a bit of a crypto play, but mostly consumer play. Come on. Hello. There we go. All right. So price to earnings, relatively cheap, 15.3 times the earnings. Fair value is almost double, not bad. Compared to peers, not bad. I do wonder what the overall risk is. I mean, fair PE is 19 times earnings, so I mean, there's room to appreciate. That should bring price higher. From a position standpoint, I mean, PayPal shouldn't be terribly expensive. If I got involved with a diagonal spread, let me see what that would cost me. So I'd go deep in the money. I'm curious, like, how far out do I want to go? I guess if we're just going to have a drop in, if we're going to have another flush down in markets, I don't want to get super aggressive on anything bullish right now. But let me see. If I went out to January, I buy a deep in the money call. I could look at like a zebra trade, which means I can only risk what I'm paying for the debit. So if I buy, that puts my break even around 79. If I sell, I'd have to put 2 of those in. So it'll go times 2. And then I sell in at the money. So for $10, $10, I mean, that gives me a break even around $60. So I've got some built-in intrinsic value, which is good. And if price goes higher from here, it's running as, oh, I can take that back. It's gonna be more expensive. That's there you go. So it cost me $3,000. My bad. I was way off. I need to go 2 to 1 if I'm going to do a zebra trade. So that's buying 2 calls in the money, selling 1 at the money. It acts like a synthetic long, but also the nice thing about the zebra trade is it doesn't have unlimited max risk. Like if the stock went to 0, a synthetic trade, which is I were to buy a call and sell a put at the same strike, that's unlimited profit potential, but I also have risk all the way to 0. So if I create a trade like this, where it's more of a synthetic play, now I can buy 2 calls at the 50, sell 1 at the money. And that'd be sell 1 at the money. Cost me $2,900, but that's my max risk versus a $6,700 risk. That's the most I can lose. Buying power, it only takes up, $1,100. How low does PayPal get? I don't know. I mean, we did miss a little bit in revenue. We hit EPS, which is fine. I'll get rid of this because that trade's not valid any longer. But do we have room for this thing to run? Yes, no, maybe. I mean, fundamentally, it's like 19 times earnings. I take this out. Maybe the smart trade is to go out a little bit longer term. But if we see, I mean, even through the downturn this year, PayPal just dropped from 93 back down to support. It's like if we stabilize in here, I could see a range trade maybe. I'm taking a 1% risk to get up to highs. It's not a bad trade. So if we go up, let's say, $20, it's a, kind of a 1-to-1. I guess what I don't want to see is this. If we go sideways, then I run out of time. So it's like, how much do I like PayPal? Do I want to just buy the stock versus trying to trade an option? Probably. If I have a put, I can protect the downside. So let me debate on that. I don't mind the zebra trade, but I've got to be a little bit more bullish overall. And right now I'm kind of not. So if I just buy the stock, I'd put in a collar trade. I'll write that down. PayPal. Watching that one. All right. Next up for earnings, just going through the list. UPS had earnings this morning. I talked about UPS being a potential buy. They did beat top and bottom estimates this morning, which is fine. We're back down to 2020 COVID levels pretty much. Let me check on UPS fair market value. I mean, Snowflake wise looks pretty good. Dividend, I can't believe that UPS has a 6.72% dividend. I know they have some pension liabilities. That's why UPS and FedEx have been performing very differently. But I mean, price to earnings relatively cheap. Fair market value, discounted cash flow looks good. I mean, FedEx is actually cheaper, but price has been very different. Look at the difference between FedEx, price action wise, versus UPS. So COVID lows down here at 95. We're trading at 209. You look at UPS, this thing has been like a dumpster fire since the highs at 234, and that was just after the COVID melt up. So that was essentially that, tech market turned in November 2021, S&P turned in January 2022, right around that top in the S&P, UPS started to fall. We're coming back into COVID levels. Like, again, not a bad trade. But I would want to have some downside protection. What's the IV on UPS? I'm curious if I can get a, gosh, IV rank is so low. I probably won't even get the trade that I want. If I went out 52 days, yeah, these ratio spreads are garbage. Unless I'm like, well, I will, buy that, sell this times 2. Yeah, that credit is so bad. All right. I mean, it's at a good level. I just don't know. I can't really trade options on it when the premiums are crap. But I'm going to write it down as maybe a dollar cost average. We'll see. It's hard for me to like anything right now. Okay, JetBlue. Please God, go up. 398. JetBlue on the daily time frame. Earnings this morning. I thought they had earnings this morning. I'm seeing on my chart they have earnings this morning. There it is. JetBlue missing revenue. It's the little airline that just can't catch a break. They couldn't get that merger with Spirit to go through. That was a fail many times. So I have shares of JetBlue. I would like to dump it at $8. I'll still make. I'm break even like $5. So I'm just trying to get rid of my shares at a win. But still not catching any traction yet. Coca-Cola is at 72. Earnings today beat top and bottom. This is a good defensive play. This is a good dividend play. Not a crazy high dividend, 2.84%, but very defensive. If we're lucky on Coca-Cola, I'd love to see price fall back down to like $60. I would definitely scoop up some Coca-Cola. Right now, I already have some shares. They're covered at $67.50, and I could roll it. It's not going to make me a ton of money if I roll it, but it's better than nothing. It's like at least it's an income trade to kind of prolong and extend the profit potential. Overall, I think I have like, I don't know, maybe 500 to 1,000 shares of Coca-Cola. Let me check. Coca-Cola. MO's up to some fresh highs. Coca-Cola is at 72. 1, 2, 3, 4, 5, 600 shares. So up around $1,700. MO up around $23,000. Like these are dividend plays that are pretty safe, pretty defensive. You don't get a lot of premium on rolling calls, but at least it keeps the trade alive. Royal Caribbean, Pfizer. Hey, Pfizer. Looking a little bit better. Missed in revenue, but shares are up. I'm happy to see prices are up. I'm still down overall on my positioning on Pfizer. I went in a little bit deep on that $25, $26 support. So let me see where I'm at. Pfizer is down about 18K. I don't need Pfizer to do anything magical, but I would love to see it get up to like $28 to $29. The fair value in this one is kind of ridiculous. It's going to be a long ways out, but Snowflake's decent. Price to earnings is really low, 16.3 times earnings. $70, I'd freaking love $70, but I'd be happy at 32. 30 works. Previous levels at $30. Break this high. Let's see something. If we form a bottom, get up to these levels, chop around, like one little push into this $29, $30 handle. I'm out of Pfizer, and I'll take a nice little winner there. Okay, Royal Caribbean, kind of the state of the consumer here. RCL. Missing revenue. I'd like to see this one pull back a little bit. I'd like to see it pull back a lot of bit, actually. We did break below the 200 moving average. So if it's possible to get between the 200 and maybe this yearly average, maybe just a little bit more, like retest the lows and see. And here's the question. If we go into a recession and everyone's talking about recession, we're in a recession, it's official, then stocks like this, which are discretionary, are probably going to take a hit. MGM, LVS, RCL, Airbnb, hotel groups, like they might take a hit if people are all of a sudden realizing like, oh, the recession, I need to stop spending money. Consumer pullbacks is not a good thing. Like this is a service. This would be instead of paying for goods, you pay for services. RCL has been a crazy run since COVID. I bought this thing during COVID, made a nice little return, bought it near the double bottom, and I just exited there. So, I've had some good trades on it, but I didn't expect this stock to go from, $40 to $250. That's pretty wild, but it did what it did. Spotify. How much does Joe Rogan cost Spotify? That was a trade from last earnings. We've still been in a big range. We did gap lower on Spotify, earnings and revenue down. What was that gap? So for the week, Spotify's down $67 on the week. That's a pretty big jump. So about 7% on the day. Interesting. I didn't trade the earnings. Still kind of in a range trade. I wonder post earnings if it is, sell above, sell below. Let me see what an iron condor looks like on Spotify. Can I get above 667 and get below 445? Maybe I can craft a little iron condor here. Spotify. Ivy rank is still pretty low. This also may not be a good looking trade. But if I went out about 50 days, Spotify. Okay, so the Ivy rank is still pretty low, 667. So collecting about $1.20 on that. That's not super awesome, but let me see what the 450 looks like. 450. So I'm not even getting a third of the width. I don't love that trade. Post earnings, if I did a little bit higher delta, like a 20 delta, put side, what's the premium difference? So about $9 on the call side. I mean, that's a little bit better. I have to go slightly higher delta. Expect to move of about 70 points. This is post earnings. Let me see here. Question on Spotify is, are we going to stay, post earnings? Is there a bit of a nothing burger as far as movement? Are we moving back up? Are we flushing lower? As long as we don't really break these levels, I mean, this kind of stays decent. Risk reward, it's not awful. I'm risking $600 to make 373. I'd probably take less profit on this trade. Meaning if I max out at 370, I'm probably happy taking, half that profit. So I make $180 on the trade. It's not a terrible trade. So let me see something here. Let me look at like a broken wing butterfly. If I did a butterfly call, let's go up in strike prices here. So we've got highs at 6. I'll kind of pin it there. So $1 credit on a butterfly. Okay, that's not bad. This is out 52 days. So we'd have to hit all-time highs. There's a profit trap. We had highs at 667. If I pin that right there, that's 60 cents on the broken wing with a potential $1,000 profit trap. Like, that's not a bad trade. I'm gonna take this trade. I'm gonna give it a profit trap. 52 days out, 30. Oh, that's way different. 30 cents. Try this guy. 50, 70, and okay, that's a little bit better. All right, let me see if I can get mid price is 70 cents. I'd obviously like a little bit higher profit. Let me see if I can get, I'll try 75 cents credit on this trade. So not filling it. And this might be like no liquidity. I might not get the trade that I want. I'm going to try to narrow it down. This is showing a debit for some reason instead of a credit, even though it's a broken wing butterfly. Just going to cancel that. Let's try that one more time. So go up to my 600 side. So that's 20 wide, 30 wide. All right, now that's a bit more risk. I don't love this as much. Try this here, 70, 30 wide. Like, this isn't terrible. I hope I can get filled with this trade. Let me see if I can get filled for $1.60. $1.60 not filling. $1.55 perhaps. $1.50 kind of final offer. Son of a biscuit. So the plan was to do this. I was considering a broken wing butterfly up here, which would be on the call side. So this is live price. I have my credit, my trap, and my risk on the call side. So this would be a price goes higher. So if price moves up, so this would be positive price action. And then down here would be negative price action. I was looking to see if I could build the same trade on the put side like that. So this is real price in the middle. If I can grab $1, $1.50 or so on the upside and $1.50 or so on the downside. And realistically, it's like I want price just to stay in the middle. And I make $3, but I have a profit trap. If price were to test the high, test the low, I can get a profit trap. That's the plan. So let me see if I can actually get that trade. So Spotify. If I can't get filled on it right now, like I'll just do it offline. But if I find the trade, I'll throw it in Pulver Alerts if I like it. So I'm going to try to get something here like at the highs, highs around 650. Yeah, 650 highs. So 652 and recent lows around 475. All right, so I'll mess around with that one. Okay, let's keep going. That's kind of it. Ultra had earnings this morning. I mean, my gosh, man, this stock is impressively volatile for a stock that usually is boring. We're up around 4% today on MO. So is it worth it? And I have some shares of it. I might end up just doing another roll for some more income. So here I have some shares. I'm covered. Let me do another roll here. So I'm going to take this June 20th and roll. If I roll it out by, gosh, it's just so terrible. I'm going to try to roll this out for another $1. That's another $1,000 of profit for not really having to do anything. If I roll it up, I'm going to pay a debit there, but that increases me to $1.80. That's another $1,800 of profit. I think I'm just going to keep this. I'll keep the 98 cents credit, and that gets me closer to like a high probability we just stay where we are. So I'm going to try to roll this out. It should be liquid enough to roll this for like 90, maybe 90 to 95 cents. See if I can get filled for 95. 95 cents. See if this will work. 9072. Yep. Okay, let's see if I can roll this. 95 not showing, 90 cents. I know the bid price is 70. I mean, I might have to go all the way down to 70, but I'll roll this down. 85 cents. All right, fills for roll 85 cents. So this one will be the same thing. Quick roll out, keep the strike the same. See if I get filled for 90 cents in this one. I'll penny this one down. 88. I guess it's only going to take me at 85. All right, fill to 85 cents in those rolls. So that is another 85 cents. So 85 cents times. So another $1,530 on the income side, just rolling a call. That's fine. Pretty defensive play as well. I mean, any dips and pullbacks, I don't mind establishing some fresh positions here. I took a lot of profit last year from the 40 to $57 run. Like I took some profit there. I was in for like probably 10,000 shares. That actually made me quite a bit of money last year. So anyway, all right, let's keep going. That's all for today. Visa aftermarket has earnings. It's going to review some earnings today. Visa at 339. AXP trading around 265. Let me do a quick peek on this one. I do have a May expiration on AXP. AXP is showing some profit. So we don't have earnings on AXP. I think they already printed earnings. So they beat top and bottom. Getting into next week's expiration, the question is, are we going to stay above 260? I think we can. I'm up about 65% of profit. I don't really want the assignment on this stock. I think I'm just better off going to take the profit. So that is grabbing a 65% winner. AXP got into it for about $1.82. Looks like I can close it down for about 60 cents or so. That's a big one to eliminate some risk and get some buying power back. So close this down for, see if I can get out of here for 75 cents. Be generous. Frick yeah. That's pretty good. All right, that's not bad. Not bad. $1.82 close out for 75 cents. I'll take the win. Let me see if I can get this for 70 cents. Well, that's ridiculous. These fills are getting so much better. I might as well try for a lower fill then. Try for 65 cents. Oh my God. That's ridiculous. Well, Unfortunately, I had a client that just got $10 better, or 10 cents better fill. But 75, 70, and 65 cents. So minimum profit was a dollar, what? $1.07 down to 65 cents, which was $1.17. So anyway, taking the winner, and the nice thing is I just added another like $8,000 or $9,000 in cash. So that one's one less thing to worry about. So the question here's what I was debating on, like if, and it doesn't matter now, but if I was sitting on this trade, if we're trading at 265 next week, this trade is worth $500 and the profit trap. So $500 and my credit. So I mean, potentially it could have been a $600 trade times 3. But the issue is if price were to drop less than 260, I would have to take the assignment and flip this thing, and that would be, break even would be around 247, and that's a lot of cash, even for excuse me, a portfolio margin account. 247 times 300 divided by 3. I mean, I'd still be tying up about 25 grand in buying power to flip this thing for, maybe a couple $100. So just not going to take the risk. I just closed out for, quick $300, no assignment risk, got some cash back. I'm okay with that. Reason I just brought that up is because Visa has earnings, so I'm curious, like the state of the consumer. If Visa comes in good, then AXP probably goes up. If Visa comes in poor, this is very easily a dump, right? I mean, and I'm just curious for my own sake, like by Friday or by next week, if we're at this 200 moving average and price goes lower, if I'm less than 260, then I know there's that potential assignment that right now I just avoided it. So I'm okay avoiding it. That's less of a headache. So anyway, that's aftermarket today for Visa. Starbucks, I don't know, man. Who likes Starbucks? I've kind of sworn off buying coffee at places. This isn't also a big test of the consumer. It's like, I know Starbucks is laying off workers. Price to earnings, a little bit pricey. I think at some point there's going to be a consumer consciousness, which is like, do you have to spend $7 every morning because you're addicted to coffee, or you want to learn how to buy a freaking coffee machine and make it at home? I don't know, but price wise, I mean, the big rip, even with like the CEO that came in and the big overhaul that was happening, I mean, the price is giving it all back. So we have a multi-year range now on Starbucks. But I would look at it this way: if we came back down to COVID lows, sure, I'll buy some Starbucks. $50, I'll buy it. But right now at 84, I don't know. If the consumer gets hit a little bit harder, I think we decrease. I'd be looking at 2020 lows. That'd be quite the discount. So I'll wait. Anything else? Snapchat today. Snap is trading at 896. Earnings are after market. I do have some trades running on Snap. I have a synthetic trade where I bought a put and I bought a call, sold a put synthetic at $8, and I'm looking to see if this runs up into 10. I also have a covered call. Break even's 963 is covered at 10. So if we get a rip today, hopefully this thing can make its way back up into the 10, 11, $12 zone. Synthetically, if it gets up to 12 or 13, I'll take the profit as well. But look at this range trade. I'd love to see it hold these levels around $8 and potentially get back up into $13 to $16 profit. So we'll keep an eye on Snap for today. Anything else? First Solar, that is FSLR. I took profit on this one. I'm pretty sure this one I don't have any longer. Yep, so I took profit on that one. That trade's done. Fundamentally, I mean, peak to trough, we're down quite a bit. The stock is down 62%. I mean, Snowflake analysis looks really, really good. Price to earnings, pretty cheap. Fair value discounted cash flow looks really attractive. I mean, I don't know what the peers are. It's like Microchip Technology, it's like, are we a semiconductor? What's First Solar? Semiconductors. So it says strong buy, which I think is interesting. That's your analyst rating. Technicals say neutral because we've been beat up by 62%. I mean, is this all it is? Is this better than is this solar power or is this semiconductors? I mean, if it's solar, then I don't care about this thing until it drops to like 70 bucks. If it's semiconductors and we've been beat up by 62%, I treat this like a micron, and hopefully, this looks a little bit better. But I think there's some risk here. You probably have a higher beta stock. Not terrible. So 0.5 beta. All right, I'm gonna put this one on the list. Let me do some more digging on this one. Anything else for today's earnings after market? No. Okay, so we'll revisit some earnings tomorrow. Let's get into some currencies. Again, index-wise today, things are still relatively calm. Fine by that. Let's take a look at dollar index. Let's do oil, gold, silver. Dollar at 99.16. Be careful on selling the dollar right now. I don't think this is a spot to sell. I'd say also we have a symmetry point right here. If the dollar just works a little bit lower, maybe a nice clean break, get a squeeze back to 101 or 102, and then you can revisit a confirmation sell up here. This trend line is good resistance. So if it stays there, offers resistance, I like that sell trade to resume the dollar. But right now it's like if you had anything running against the dollar, it's a great spot to be taking some profit. There's a lot of noise right here. We are oversold. I think a lot of conditions like, Aussie dollar reached to overbought conditions, euro dollar overbought conditions, pound dollar overbought conditions. I'm not saying the dollar tops and bottoms are in. This DXY bottom is not in yet, but I will be watching price. So if it's a, falling wedge or something along those lines, bottoms out, squeeze is very possible. Okay, so that would be a near-term buy if I like the confirmation. I just don't have it yet. If I miss the buy trade, let's say this thing just squeezes up here to 101 or 102, I'd be looking for confirmation to then sell it. I don't mind a sell trade here, stop above, and then try to get some fresh lows. So still waiting for just better entries, opportunities, confirmations on the dollar. Oil is dipping. I am going to take a dip into oil myself. If we come back down to the lows, I'm probably going to take a stab at oil. Not yet though. Gold. Very choppy, very sideways, probably driving gold traders nuts to see that no price actions happened the last 5 days. Obviously we had a big drop, but 1, 2, 3, 4, 5 days of indecision. It's like, what are gold traders going to do? There's nothing happening. I say ride this out. Little consolidation might have a little bit more downside. That's fine. I think this is a good opportunity to buy some dips on gold if we get them. Right? If we get some dips on gold, I like to buy the dips. 3,100, 3,000, great spots to buy. Anything here for like a chunk 1 and anything down here for a chunk 2, I would position gladly for, a fresh visit of those highs, maybe higher. Depends on what this risk appetite becomes. But I just say be patient. If you're long gold, fine. If I had more shares of gold, I'd be selling calls at 3,500. Because I don't mind it at this point. Like, I don't want it to get called away, but I also don't think it will get called away because we're going to stay probably sideways. But if I could sell covered calls in the short term and I could sell covered calls right here, I wouldn't mind like grabbing some quick income, like in the next week. Let me check GLD for a second. So highs around 317. I mean, can I sell a 320 call and actually get something for it? Let me find out. So go out to this week, 320. I get zero. It's like premium is just crap on GLD. So if I went out to next week, I mean, I get 20 cents for it. It's not awful. It's a very low delta. Question is, if I did this, let me see. I've got gold for a lot of my accounts, but I don't have enough to. Yeah, I mean, I just dollar cost average into gold. So I have a rate. It's a bull put spread that's up, a couple $100. I have a bunch of shares. I mean, I'm still riding on some profits. Also, I'm happy to add more to this. So I don't know if I'm going to build up a position where I have 1, 2, 3, 4, 5, 6, 7, 700 shares of gold, but I don't mind having something, So point is, if anybody has like over 100 shares of GLD, I think a good thing for some income would be sell a covered call, grab 20 to 30 cents in the next 1 or 2 weeks, lower your cost basis, and kind of rinse and repeat that in case we come back and fill some gaps. I mean, I still like owning the shares, but it'd be nice to also drop my prices by a little bit. I mean, again, getting 20 to 30 cents is not awful. Like going out a week, grabbing 20 cents, going out of another week, it's like, if you can lower your cost basis over a month by $1, that's not bad. And any dips and pullbacks, it's like, where would I like to see it pull back to? Well, this is level 1, at least a previous high, right? And then a low, and then a 200 moving average. Area 1, 2, and 3. If we get pullbacks on gold, that's where I'm looking to accumulate more. Right? So I'm not short gold. I think gold is right now going to serve as an interesting hedge against risk off trading. If the market goes risk off, gold probably soars. But the reality is, if the U.S. and China do come to terms with some type of agreeable, trade agreement is mutually beneficial, or both parties appear to be happy, then I think gold is likely going to lose some of its luster, pun intended. But it is like right now the ultimate kind of risk off flow. It's acting pretty extreme. I think we have a potential like bubble, but also the one crazy thing about bubbles is now that it's more and more popular. I don't know if you saw this last week, but Barron's had gold on the cover, that traders are going in and piling into gold. If it becomes so crowded, we're probably going to see a flush out. I mean, everyone jumps into gold. We're going to see a correction that probably scares some of the investors, and that scares the average like late traders. Like, gold has been in a bull trend for the last 2+ years. You've had lots of opportunity to be long, and you're still benefiting from this nice little follow through. Everyone that's trying to buy gold now, shake them out a little bit, and then you see that it really was just a bunch of noise. It's just a pullback, and you can still be long gold. Okay. All right. Silver. I want to see if silver can break this resistance at 34.88. Break the high. Silver, I talked about this one yesterday. There's so much good potential on the upside, especially if silver is a catch-up trade. There's measured moves out to 41, and there's 2 highs previously in the last 45 years, 2011 and 1980. Highs at $48. So that's 79% higher than the current price. I'd love to see a little industrial metal that can move 80%. And I own the thing down here at like $20. So yeah, I'm holding out for a little bit longer on silver. I like both. I think silver is a better trade technically because I can see the levels, but gold is still a good looking play. Bitcoin, as we mentioned this week, I mean, we've got a nice little swing from this low to high, swept these highs. I'm looking for a pullback towards like 80, probably about 85,000. 85,000 is a good pullback level to add some more. If we pull back to 75, great level to add in some more. This could be a bull flag, right, where it just goes higher, and that's fine. But if we hit those highs, if you're not looking to hold Bitcoin, I would be looking to take some profit there, because I think this could range trade for some more indecision in the markets. I think we could have indecision in the U.S. markets. I think we could have indecision in Bitcoin. We could have a big range here. We could have this big accumulation zone, just like we did back last year. Once this made a run, accumulation. Made a run, could be accumulation. If you're diamond handing it, then, just add more, try to be tactical, and hopefully we're making fresh highs. What I do like about Bitcoin from the technical side is just looking at a couple fibs here. This swing here completed to the highs, right? So my next swing, so that swing hit our profit target. This swing from there, potentially a forecasted move towards about 125 or 145. I mean, obviously I'd be happy with that. If we make fresh highs in Bitcoin, target 1, target 2, from this low, I mean, Bitcoin would probably cement itself as one of the better performing assets this year. If we go from a, low to high of 66% or a move of 94%, it's not the yearly move, but I'm saying like from bottom to top, that'd be a pretty good push. So if we get all-time highs, otherwise accumulation in here. More of a range trade, but the nice thing is if as long as these levels hold, then a breakout higher, I mean, measure that move, breakout higher, right? So got some swing trades in here. Potential move around 132. I like the fibs around 125 to 145. So there's a few spots in here. Not a bad spot to be taking profit if you're treating it like a tactical trade. MicroStrategy, I'm up some profit on this one. This is a bull call spread If Bitcoin makes some fresh highs, I'm going to ride this one out a little bit longer. MicroStrategy is up around $6,000. I've made $24,000 year to date, which is not too shabby. I'm seeing a lot of back and forth. I'm up about 15 grand if I get it called away at 310. I might do an income trade. June is not that far away, but I'm also thinking about this whole situation July onwards. Fed starts to cut rates. Tariff window is done in July. It's going to be a reality check. Is it better? Is it worse? So anyway, I've got a covered call here June 20th out to 310. So let me see. Collar trade, bull call spreads. So this is a collar trade here. So 310 to 200. That's a collar trade. And 310 to 200. Collar trade. This is a bull call. All right, so now these are all labeled. So all in all, in some profit, has some shares, dollar cost averaging in, little micro strategy. The 2 to 3 times leverage Bitcoin instrument. Ethereum, stay out of it. Copper, I'm waiting for probably a big wedge on copper. High, low, maybe this is the tuning fork type move where it just gets lower highs, higher lows. Let's see what Dr. Copper has in store for us later this year. Japanese yen, up a little bit. Nikkei, flat. FXY, EWJ, making some fresh highs. Okay, I'll keep an eye on this one. Chart alarm set at some recent highs. German index still freaking going up, man. Well, I guess if you bought the German index, the DAX, on this 200 moving average, it's great. It was basically a huge reset for the year, but man, what a dip. Same thing on FEZ, FTSE. I mean, the hard part is this was a systemic risk that was like a 2 to 3 day window, and then all of a sudden it just flipped hard. So, I mean, if you got it, you did, awesome, congratulations. If you didn't, I wouldn't chase this thing at highs right now. I think if you're lucky, this thing goes up to revisit the highs and then possibly comes back in for like just a range. It may not be this ugly high to low. It might be something in between, but this could be just a big shakeout. I mean, I don't know. The market's just crazy, man. Like, what do you do with this? This market dropped in like a week. It dropped 21%. It was like 2 or 3 weeks, and this thing dumped hard. It's like we're right back up to where we started. So it's tough to say like, oh, I could have timed that. No, you couldn't have. Like, if you were courageous enough to buy it right there, then you got that trade. If you didn't, you didn't. So I don't want to feel like you're missing out or anything. FTSE's fine. Argentina, it's like I'm just not buying these things at these reflexive highs. China, if it's a bull flag, I might still go long China. If we pull back into this trend line support, I don't mind this with defined risk to go long China. I mean, again, I think that U.S. and China have to be frenemies for the world to get along. This is looking better. Glad I got some shares of EWZ and ILF because they're both showing some signs of gaining. This is encouraging. So not bad, especially in the commodity space. If commodities are going to start gaining traction, EWZ, ILF, this is Brazil and Latin America. Really good value plays. I mean, we're pretty much at COVID lows. I was buying EWZ around this like 25, 26 handle. I'm not going to let go of the stock until probably, or this ETF rather. If we get up into like $35 or $40, I'll probably dump it. But, that's a nice little gain for, maybe 12 to 15 bucks a share. Not bad. Okay, MAGs, we have MAG 7 earnings this week, Wednesday, Thursday. Hanging in there for some resiliency, maybe enough to get back into the 200 moving average, maybe able to get back to this 50% swing, maybe the 50 to 61% swing, maybe this outer trend line. So I just don't think the MAGs are doom and gloom yet. But I do think the MAGs, if we have a push to the upside and then they're sold off again, I do think that is enough to drag the market down with it. So I do think there's really solid resistance levels around this 50 to 61% zone. If MAG 7 turns over, the market's probably dumping with it. That was the big rotation that started off this entire year. Apple at 210. Amazon is up a little bit. We have earnings this week. Broadcom is back above the 200 moving average. Google is fading from last week's earnings. Meta, I'd like to see Meta actually go lower. Meta's earnings are on Thursday, I believe. Wednesday this week. Sorry, it's Microsoft, Meta on Wednesday, and Apple, Amazon Thursday. Microsoft is nicely off the lows. I don't have any other trades in on Microsoft as far as ratio spreads. I just have some partial shares. So I bought some shares down here, and I bought some shares in here. I just did an allocation of about 1250 and 1250. So 1250 and then 370 bought some more. So it's about a $2,500 position, and I'm looking to see if we get back to, highs at all this year. Maybe Q4, maybe Q1 next year. If it comes down again, I'll probably use an option trade for a little income, but I just want to go further out of the money. I don't want to flirt with this 350 low. Netflix, I think I could call a top on Netflix here, but I think they could also be, short-term suicide. So I'm not going to. I looked at the price out yesterday. I just don't get the credits that I want. But I do think Netflix is probably going to have some type of range, maybe something like that. But otherwise, I mean, I'm just going to wait to buy dip. It's also freaking expensive. I'd love Netflix to split, and I'd happily buy it. If I want to control options, don't give me $1,000 stock, right? If we did a 10-for-1 split and Netflix is $100, I gladly put on some puts. I sell puts at 90, 80, 70, whatever looks good, and see if this thing can continue to run. But I don't know if they're going to split. Nvidia hanging in there, probably pretty buoyant around the 80, $85 to $90 support. I'd like to see it get us back into the 120 handle, the 115 to 120 handle, about the 200 moving average. Tesla hanging in there at 280. I do have some trades on Tesla. I have some shares. I just closed out that one this morning. I've got another one that I'm watching with a 245. I do have some shares that are potentially getting called away this week at 257.50. That would give me about $6,900 if I get it called away this week. If it is looking good, if Tesla is up above, if we're up above $300 this week, if we're greater than $300, then I am likely going to roll another 257.50 call out a week and try to grab another $3 to $4. I have 500 shares, so if I can roll it for $3 credit, I'll make another $1,500, and that goes from about 7K to this week. If I don't do anything, it makes me about $6,500. But if I can increase that to $7,500, then I'm making 15 grand in about a month on Tesla with having just a little bit of ownership and just using some aggressive covered calls. But I'll make that determination this week. If we're dumping hard, then I want to see if it stays above 257.50. If it does not, then I will just add another covered call and try to lower my cost basis. Okay, Berkshire. If premiums were better, I wouldn't mind being toppy on this one as well. If the market turns over, Berkshire's probably going to fall back down with it. So could be, I don't know. But let me see. If I did a call condor on Berkshire, so Berkshire B, go out, let's say end of June, about 52 days out. The highs around 537. So if I were to, these are 10 wide, I don't think I'm going to get what I want out of this. So if I did a 10 wide, yeah, this is going to suck. Well, it's not terrible. We'd have to make all-time highs on Berkshire by a pretty decent amount. We'd have to make highs for a stock that is a 0.55 beta. So it's not heavily correlated to the S&P, but I don't think this becomes like a defense play. First, let's compare Berkshire Hathaway B. Price to earnings. Buffett, I think it was Munger maybe said that their price was still high. It's valued at $918. How do you put this in comparison with MasterCard, Visa, and Amex? I don't understand how that's considered peers. In my opinion, this is like trading the S&P 500. This is like the value S&P 500. I wouldn't compare this to credit cards. So anyway, income trade, is it worth it? Mechanically at a 20 delta, probably not. That's a lot of risk for not a lot of reward. There is a profit trap here, so you could actually get a bonus profit. It's only out 52 days. I don't know. It's kind of silly. It's like, do I want to call the top? Not really. I'll probably hold off. I think realistically, it's probably a winning trade. I'm just not going to call the top. Okay, bond wise, up in short-term bonds, up in medium-term bonds, up in long-term bonds. That's encouraging. 10-year yield is dropping lower. All right. I'm just keeping a very close eye on the 10-year. And lo and behold, you've all been patient. So let's get into some currencies. Anything happened in the last 15, 20 minutes? Dollar on top, JPY is flattening out, Swiss is flattening out, Aussie, New Zealand bottoming out a little bit. That's good. Still pretty quiet, like, vertical axis 40 and 50, 40 and negative 50. I like a pullback here in Aussie CAD. I'm actually looking to get long. So this low to high swing, I'm looking to see if this pulls back. Take this maybe short-term fib, low to high. See if this will give us a, typically this is a good for like 382, 618 swing. See if this is a higher low and then a swing back up into resistance. Not a bad trade on old Aussie CAD. So I'm going to stay long Aussie CAD, stay long New Zealand CAD. Aussie Swiss. Like I've said here the last couple of weeks, I'm actively looking for a bottoming formation. So if this is a 1, 2, 3, 4, 5, come back to this pocket, come back to this cluster, I'll turn this into a win. I may shift these down, but if it just starts to head up into this pocket, I might just take the winner and then cancel these and just look for a bigger picture move, right? Like if this is just a grind to the upside, I'll take the profit here and close it out for a win, and then settle back in for more trades, move these all lower for swings. This would be a low, high, looking for a higher low and a symmetry move to higher high. So I'm still actively watching, but if price develops where it just keeps going higher, 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 I'm not going to get greedy, like thinking this thing has to go all the way up to 6,000. I'm just going to take the profit on my break even now and call it a day, and then I'll reposition myself for a bigger picture move. But keep watching. Okay, Aussie yen. As long as we don't break these lows, I think a swing trade it offers some pretty good reward to risk. So if we have a pullback in this zone, look for a trend line break, swing trade with stop loss below, or of course an equal low is a great spot to have even less risk for high reward. But I just high time frame structure, lower time frame confirmation precision would help that. Aussie New Zealand. I'm going to add in at 106. I'm going to add in at 103. I'm going to add in at 101. I'm just going to hold this thing for a big range trade. I'm just going to dollar cost average in. Aussie dollar, stay out of it. Right now, it's like if you're long Aussie dollar, I would have been taking profit, which I did. I bought it in here, took some profit, bought it at 6,000, took some profit. If it pulls back, 6,300 is not a bad spot. Would it be possible to pull back to the double bottom lows? Maybe, but I would still be interested in look for confirmation here to go back up for a swing. This is open space, by the way, if we get there with a weaker dollar, or a pullback into the same lows and see if this level holds. That's a very low risk, high reward type setup. So I like to buy it, watch for confirmation on one of those key spots around 6,200 or 6,000 on Aussie dollar. CAD Swiss, again, watching for a bottoming formation. If this goes, well, I mean, I suppose it could just keep grinding up, form some type of bullish pattern here. I'll take it to a 3-wave symmetry. If it is going to make a fresh low, I'm still looking for divergence, try to find a bottoming pattern, take it up for a 3 to 5 wave symmetry, but break even, anything above here is profit. Anything up here I'd be thrilled. My initial target on this one was 7,000, and I've just made the adjustments. My break evens, lower, obviously, breaking a trend line. That might be another spot too to watch for, is just wait for this trend line to break. And if it takes time to bottom in, fine. Like this can be choppy, make some fresh lows, look for some divergence, but on the right-hand side of the trend line, probably looks a little bit better for recovery. AR Capital, definitive statements are my least favorite. So, if you're certain on that, well, there you go. But there's always potentially, as Forex especially, Forex loves to test highs and lows. It can wick that low. It can test that low. It certainly can go past that low. But I would say with the dollar, if we get a pullback towards 101, 102, it's like that's probably a 200 to 300 pip pullback on the Aussie dollar. I think there's opportunities to get long. But I think for the Aussie to get stronger, the New Zealand to get stronger, we're going to have to see China be pretty resilient. China's going to have to get strong. Like China gets strong, you get that kind of proxy trade with Aussie New Zealand risk appetite. But yeah, I mean, I just think you had a big squeeze on the dollar. We're off to like the worst start in 30 years on the dollar. It's down, almost 10% for the year. The last time that was that bad was in the 90s. And I think this time it's, major potential consequences with just the whole conversation is the dollar losing its world reserve status? Is everyone liking gold better? Is everyone liking Bitcoin better? U.S. bond market looks less attractive, so they say. Truth of the matter is, foreigners are buying debt. Treasuries are being bought. You can see that with price action, like the yields are going down and the bonds are going up. I just don't know if that's a short-term rotation or not. CAD yen, if we hold these lows, again, watch for some spikes and fake outs and some noise. But if we hold these lows, a little trend line break here goes a long ways, and maybe some low risk, high reward if we have some risk appetite there. Swiss yen, no trade. Euro Aussie, possibly a pullback like I was talking about. Take this swing high, swing low, look at like a 50618. Entry in here, stop loss above, and look for a swing. Good reward to risk, maybe a 1.5, 2 to 1, something along those lines for a swing trade. Gets back into these pockets, finds these inefficiencies. I think that's a good looking trade on Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand have a similar look. Euro CAD, I'm looking to see if this structure will break. If this structure breaks, some sell opportunities back down to range lows. Otherwise, if it comes back to the highs, not a bad spot to look at selling very high, and then same thing, just kind of taking it down for a reward to risk that's favorable. Euro Swiss, watching for a bottoming formation. If this is just going to slowly work its way up, I might take some profit here. We get back to 96.50, I might take some profit and then look at a rebuild. I'll get a swing trade in here, call this a low, call this a high, rebuild it like the 382 to 786 pullback zone, look for a 3-wave to 5-wave move. Still going to stay this thing long. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. If it pulls back, 50618, swing trade, look for a swing low. Euro dollar, I'd like to sell the euro dollar at the tops. If we come back up to these highs again, I'd love to sell this thing up here with a bit more confirmation. Pretty tight stop loss, try to get back down to a decent fib zone. Hopefully that is the case. We have a big inefficiency in here that I think the dollar is going to find. So, watching this structure, it could be choppy in here. Don't call the top. But if we get to the spot where it sells off, that could be a nice bear flag to trade back into some, fib levels. Pound Aussie, similar to the Euro Aussie. If it pulls back, 50618, look for confirmation, look for a swing. Pound New Zealand, very similar. Pound CAD, if we hit the highs around 87 to 8800, looking for a resistance level to sell. Pound Swiss, I'm still looking long to the 1360 zone. Pound yen, no trade. Pound New Zealand, same as Pound Aussie. High, low. If you get a pullback in here, 50618 zone, swing, look for a swing. If you get to equal lows, obviously that's not a bad trade either. Just move the stop loss. If we go lower than that, trail the stop loss. Pound dollar, waiting. We actually poked a fresh high yesterday on the pound dollar. Again, I think it's close to getting overbought. I would not be buying pound dollar right now. New Zealand CAD, I'm still looking long. Any pullback in here? Pull back towards like a 50618 zone, looking for a swing. I like this low. So if this is a low to high swing, I'll measure the move, right? Low to high, higher low to higher high to higher high. Somehow getting to 87, 8800 would be my profit target. You look left on the chart, you can see those previous levels. That's a big, ridiculous swing, all the way up to 88, down to 76. I don't mind this trade at all. New Zealand Swiss, watching for a bottoming formation. Same thing on Aussie Swiss. If it's all this is pushing up for a wave one, pull back here, push to symmetry, taking some profit. So I'm looking to see how high I can get this thing for a safe profit. I might, cancel these trades and move these back in, but I'm just going to wait. If this goes all the way back down to the lows again, maybe adding at the bottom, but, watching to see how this thing forms, tries to find a 3 to 5 wave move up. New Zealand yen, New Zealand dollar. New Zealand dollar, a pullback is fine. Pull back into, 382-618 zone. Do we hold this low? Is this a safe stop loss? Do we get another push on the open? Like the good thing about this trade is if we get a pullback and we see some confirmation to break back bullish, this is such a good open space trade from like 58.50 to like 6,400. Let's just say from 5,900 to 6,400. I mean, that's a 500 pip space that should offer up some good trends. I don't mind that trade at all. but I think a pullback is needed because that was a straight line that probably needs to see some pullback. But once it pulls back, we see the bulls kind of accumulating here and then look to see if we're making a higher low and then start that process. I think that is a good looking trade. Dollar CAD, still the same thing. Chop suey right around that 38.50 handle. Dollar Swiss, watching closely, looking to get back to this 8,800 pocket or so, watching for bottoming formation. Dollar yen, I think a low is close. I think a low is close, but it might poke these lows a little bit. Just don't be faked out by trying to sell this thing at the lows, right? And unless the Japanese yen is going to have a big move, it's like BOJ is not going to do anything with the rates right now. They're likely pausing this 0.5. If this is putting him in a bottom formation, any risk on trading should help this thing get back to like 148, 149. Any bottoming in the dollar should help this thing get back to 148, 149. I just don't want to be faked out at the lows. So if it goes a little bit lower, that's okay. But any confirmation to break, I wouldn't mind buying low, tighter stop losses. And I think the risk is tight compared to the reward if you're going long. I think you have a better trade there with some confirmation. All right. And that's A to Z. Cover some stocks, options, indexes, coal, gold, silver, Bitcoin, oil, dollar, currencies, bonds, yields. Earnings tomorrow. So earnings today, we have Visa, Starbucks, Snap. Let me add a highlight here. So Snap, I'm watching. Tomorrow, Caterpillar in the morning. Afternoon is a big one. So Wednesday, close Microsoft, Meta, Robinhood has earnings. Robinhood is at 48.86. We'll see what happens. But I mean, I'm sure the trading business is probably pretty good. Robinhood's got plenty of incentives. They're Robinhood Gold. They're low fees, free trading, blah blah blah. Take it or leave it. I lost a lot of faith in Robinhood with the the Melvin Capital Citadel shakeout during GameStop, and I'm not with them. I think that they did they gamified trading, didn't really democratize trading, but they did shake it up a little bit. I mean, offering zero commission trading. Now we have zero commission trading. So kudos to Robinhood for that. But as somebody that manages money, Robinhood won't get my capital. I just think that there's that potential disruption. So I like a broker that's sitting on $100 billion in cash. That's a little bit more liquid to me than they needed a bailout at like $3.5 billion. So makes me a little bit skeptical of just how look. It's good for like good trading business. I know everyone loves their app between Webull, Robinhood. That's like very user friendly, but it's a serious business, and I don't mess around with when my money is tied up or my accounts are frozen and I can't access something and you're telling me I can't sell or can't buy, then I try to find another broker. Gold. I mean, we never talk about gold in these sessions. Just kidding. I like gold. I just think it's time for a dip. So I'm looking to see if gold will pull back. I think we're going to have some consolidation here. So if gold at best is going to be high, low, lower, high, lower, low, I think we have a pullback coming. Watching for it's a 4-hour period, 200 moving average. That's not bad. A daily chart. I'm just looking for some recent highs. And we also just might range. I mean, gold has had such a huge run. It's like, what's stopping gold from just going sideways? And this gives more traders a chance to accumulate, gives moving averages a chance to catch up. Any dip can show bounces. I mean, I do think gold can stretch. We might just continue this very high bar count. I personally would love to see gold at least make a higher low to higher high. So this one, lower low, higher high. So swing, lower high to lower low. I'd love to see that spot where I can at least get something around like 3,100 or lower. I'll add some more shares of GLD and maybe look at a gold futures trade. But if it just stays sideways, I mean, just don't get overly excited. I mean, it's probably not going to be a huge drawdown if it goes sideways. It does have the potential. I think for gold to go higher again, we're going to have to see another leg of risk-off trading. If the markets are stable right now and kind of hanging out in this noisy spot, volatility remains under, like if the VIX is sub 30, which I know is ridiculous because that's typically a high VIX. If we're less than 30 on the VIX and we don't really have a big risk-off sell trade, then I think gold is going to stay sideways at best. I think a correction could happen. I'd love to see a correction, but I still love to get long again. So 3,100, 2,900, 2,800, very good levels to be strategically buying some more gold. If I don't see them, okay, fine. I'll just prepare for a bigger bubble ahead and, off we go. So, all right, I'm going to wrap it up there. I'll make sure I didn't miss anything on my calendar. I'm still good. Okay, I'll let you go for today. Thanks for being here. I'll see you tomorrow. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.